all, I have to say a very big thank you to everybody who's here. It is such a pleasure to have everybody here. Let's round of applause, please. And especially want to thank these amazing people who mostly put this together. I think one of the most amazing things about the Future Africa Collective is that, we've got such an active member base, and you would be shocked that these people do not work for Future Africa. We couldn't afford to pay them. We're just investors, tiny investors, for that matter. So these people have quite literally volunteered their time and effort to put everything together, and obviously coordinated very closely with our team, folks like Ore, who's over in Belgium, and Dorcas, KB, Michael, who's here, Caleb, who's here. They worked very closely with our team to set this up, but they actually did all the work on the ground because we don't yet have an office in DC. So very, 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 very thankful for that. I just thought I'm going to do a keynote, but I thought before we did that, we've been thinking a lot about Africa and the African diaspora because we're expanding our vision from just being on the continent to thinking about our peoples wherever they are, right? And bringing people home, because that development is not possible without their participation. And as part of that, I very recently had the privilege of spending some time in Barbados with the Prime Minister and her cabinet as we talked about what it would look like to build a financial powerhouse from Barbados that could power African prosperity. And I was, in a moment of inspiration, we decided to ask her, would you like to say a word or two to our group? She was actually thinking about being here in person, which would have been awesome. But then unfortunately she had to run, but she said she would like to do a video. So I haven't seen this video, but I thought it would be important for us to hear from her because she's an amazing voice for African prosperity. So we can put on the video and then I'll go right after and then we'll do our stuff. Awesome. Fantastic. Thank you very much, everybody, for making time to be here. Is there a clicker? Next. Okay. Well, we can go back one slide. Well, I just want to say a big thank you again for everybody who made time to be here. It's an amazing Saturday, good weather, could be anywhere else in the world. And we're excited to have you here. And specifically, I also want to thank our friends who are back home watching on the screen because they're also part of our community. And especially very, very big thank you to our collective members in DC, as led by our hosts over here, who have done an amazing job of bringing us together. This is first of its kind event in many respects. Typically, we go to other cities and then we set up collective events and try to bring community together. But even in doing all of that, we hope that there will be one day where, we have something like this happen where our community brings us to the table. And I'm hoping that this becomes the format as we go forward. I'm going to spend just the next couple minutes just talking through a few topics that are dear to my heart, and I will use the slides as something of a guide. But I'm going to talk about three major things. So first thing I'll talk about is the fund, because I'm not under the illusion that everybody understands what we do. We've been historically a very interesting organization from a public communication standpoint. I think you probably heard more about certain scandals than you probably heard about the firm itself. So I'm just going to run you through what we actually do, even though we're a very quiet force in the African tech ecosystem. And the second thing I'm going to do is I'll talk about the collective, because especially for those of you who are members, you may not understand the significance of this community, the collective. It's a very, very powerful community that has blown a lot of myths apart, including about where money comes from, how African startups are funded, and what is possible for us to achieve when we come together and build. And then finally, I'll talk about the future of Future Africa. You're going to get a preview of how we're thinking about our firm, particularly in the wake of some of this market trouble, and more importantly, where we're going next. And then we'll have some Q&A, you know, for the privilege of you guys having sat down and listened to me for much longer than you should. and then we'll close the day and move on to other more interesting sessions. We're good? That's a good. Okay, so first of all, what is the Fund for Africa's Future? The Fund for Africa's Future partners with mission-driven founders that are turning Africa's biggest challenges into billion-dollar businesses that deliver outsized financial returns as well as impact. For us, you know, a big part of our story, you know, as Africans is always somebody selling Africa as the next nirvana, you know, Africa rising, you know, Africa unchained, Africa this, Africa that. And I think for us, and I cannot tell you the number of fundraising consultants that have warned us against this, but we stubbornly persist. We are not oblivious, neither are we willing to overlook the continent's real challenges, right? And in fact, beyond that, we're focused on them. So we're not here to sell you a snake oil story about how everything is amazing and, you know, Western press is just the problem. They're focusing on the wrong pictures. We're here saying, look, Africa has real challenges. But at the same time, that's not the end of the story. The story actually is that those real challenges inspire amazing, profitable, not charity, businesses that have the ingredients to transform the world. If more and more of them will come to life. And we have the dollars to prove it, the $1 billion to prove it. That has been our story for the last 10 years. And that's kind of where we anchor our ship. And we know it's not a popular narrative. Many people prefer to tell the story of how there's a rising middle class and there's all this money in Africa, but we can't see it. And we say, look, there's a lot of promise, but there's more importantly, a lot of challenges to work through. But if we sit down and work together and work through those challenges, on the other side of that rainbow is an amazing, amazing opportunity to build some incredible global businesses. That's kind of our point of view. Next slide. So the Fund for Africa's Future, which most people call Future Africa, sort of is built around a few bedrock. Sorry, is it me doing that? Okay. So the first is, you know, our vision. So what are we working towards? We're working towards a future, we call it an African future. And that an African future is a future where African prosperity is within everyone's reach. We will talk to you a little bit about African prosperity in this presentation. So if you hang on with me a little bit, you'll find out what that is. The second is, what is our mission? What do we wake up in the morning to do every day? And it's really just three things. We provide capital. In the last, you know, 7 years that we've actually actively been investing, we've doled out about $10 million in capital. We provide coaching. We actively work with our founders. We're not an investment firm that sits in DC and tries to talk to our companies everywhere else. No, we actually are on the ground right beside them in pitch meetings, in front of clients, doing the work, ideating with them, thinking with them. And then, of course, we do this within the context of powerful communities like the Collective, where we can bring together not just, you know, other investors, which are very important, and we have a number of them here, but also bring together, you know, government officials, large corporates, you know, people with talent and skills to support the companies and help them get to their true potential. And again, the focus remains taking a square look at our challenges and figuring out how we turn those challenges to billion-dollar businesses. And then we do this by focusing on 3 core values that are not going to change. And the first one is really important to us. We lead with courage. So in many cases, and I think as you see with a lot of our work, even though we don't talk that much about our work, we lead the continent in many respects. We're the largest seed stage investor on the continent, bar none, because we have the largest number of portfolio companies, bar none. We've deployed and returned, which is, I think, the most important metric, more capital than most of the other investors on the continent in a shorter period of time than everybody else. We invest in places where most of our colleagues would not dare to even think about investing, you know, including hardware, including urban planning and cities. And personally, obviously not with investors' money, democracy, politics, and lobbying, changing laws. So we lead our colleagues in that respect. Second of all, we do very hard things. Of course, it goes without saying that if you want to lead with courage, it's very easy to lead with courage on very easy things. But when you want to lead with courage, it probably makes the most sense to lead with courage on very, very difficult things. And for us, you know, that means leading with courage on problems that most people want to look around. You know, they want to find a way around it. They want to make it the government's problem. We like to take on those types of challenges: unemployment, education, business infrastructure, financial infrastructure, electricity. You know, we want to take on the big problems. We're not saying, oh, government is not working, which sometimes is true. We're saying, well, we can make government work, right? And that's our mindset. And then most important thing is, as we do all of this, we want to help communities prosper. And that's not just the communities where we work in Africa, but it's also the community of founders, the collective, the different groups that we bring together. We want to make sure that they're growing and they're doing well. Next slide. So, I mean, you know, a lot of times people that don't know us well ask, okay, you know, got a lot of lip, what you've done, you know, what have you done? And, you know, we are foundational investors and builders in 3 companies, and that have, you know, become extremely valuable returns wise, because unfortunately that's the language of our business. We care a little bit about it, but that's not all we care about. But you know, we share that. Of course, I don't know how many of you know about Andela, where I was co-founder, but also an investor of the Future Africa platform. And the big idea was basically we had a skills mismatch. Lots of young people not skilled enough for the jobs that existed, which are digital jobs. And I think we prove, in the midst of a lot of doubts, together, and some of my colleagues from Mandela here, like Michael Rosenberg over there, that if you actually invested in young Africans, you could actually develop an entire cadre of talents that could serve the world. And so for the first time in a very long time, people were not asking, oh, what can we do for these poor young Africans? It was literally a feeding frenzy of how can I get an Andelan into my company, right? How can I get one of these extremely talented young people into my company? And that snowballed into what is now the remote working revolution, and is now a very key mainstay of many economies in Africa, like Nigeria. And we have Flutterwave. And I think on the surface, people look at Flutterwave and they see a payments business, which is one way to look at it. But I think it's very important to understand the context when we kicked off, which was you have a continent with 280 different payment methods, and all the merchants were using cash. And it was very clear that the problem wasn't that there were payment methods. The problem was merchants can't integrate 280 payment methods, and quite frankly, shouldn't care to, right? And so Flutterwave, for the first time, pulled together all these different payment systems into one, and gave merchants the sort of power that one would expect of maybe a PayPal or a large bank or a big business like Uber, while also serving those people. And so all of a sudden, you know, simply by including all the different ways that people pay, all the different currencies that people pay in, and all the different people who need to pay and get paid, you build an extremely powerful platform that is now the most valuable startup on the continent. And then more recently, one of our biggest winners is Move. which is revolutionizing car ownership around the world. We actually started this on the continent, but it's now a global business. And the big idea there was, look, if you're on Uber, right, the key implement you need is a car. And I don't know any other job that tells you the entry point value is a $6,000 machine. I don't think there are many people who can get a job if that was the way it is. But that was what we're telling people who earned less than $100 a day to do. That, hey, you want to be on Uber, which is an easy way for you to make some income, or you got to find $6,000 and buy a car. And there was no credit to help you do that. And there was no one was going to give you a car. And your only other option was to get a medallion, essentially a slave contract, right, with capital, where you did all the writing and you did all the making money. And the car got worse as you got older. I've never seen an employment contract like that, but that was what drivers had. And then Move came on the scene and basically revolutionized it by saying, look, every time you drive over a 3-year period, you get closer to owning an asset, which is a car. And that business has just blown up and grown incredibly fast and is now, in cities all around the world, improving the lives of immigrants who are driving. And again, the returns are, the impacts and the returns kind of more or less speak for themselves. 2 of them are billion-dollar companies. The third one is very likely to be in the next possibly 6 months. And we've made money on doing that, which is one of the biggest myths, I think, that impact has kind of introduced into the lexicon, is this idea that making impact and making returns have to be 2 separate conversations. And our deepest belief is that that's not true. And in fact, if you're not making returns, you're most likely not making an impact, except in the pockets of your executive directors who are living in DC or something, right? And if you're making returns, you're not going to make returns for much longer if you're not making an impact. You can ask the guys at Shell who are now packing their bags and leaving Niger Delta, right? So the 2 go together. There is no making impact without making returns, right? That's self-serving. And there's no making returns without making impact. That's short term. Next slide. Again, like I said, this is a limited data set. I think it stops Q3 2022. But as of this time, we have 92 companies in the portfolio. We've invested in a few more since then. We've deployed about $1 million across the 2 funds. We're currently sitting on roughly about $30 million in assets under management. $43 million in assets under management, both realized and unrealized returns. I think, forgive me, that's $33 million in assets under management, and 9.3 of that has already been distributed. So we no longer sit on that. And the multiples on invested capital are impressive by any standard all over the world. So again, the myth that the only way you can make money is by forgetting about impact, and the only way you can make impact is by forgetting about money, again, it's disproven, as you can see here. The next slide. And again, this is a slide I'm proudest of. I fought very hard to keep it in because all the capitalists in my company were trying to take it out. I was like, no. For me, there's obviously an inclusion question, right? And as far as I'm concerned, it's something we used to say at Andela all the time, which was brilliance is evenly distributed around the world, but opportunity is not. And when we think about the fate of female founders on the continent, that's the story. When we think about follow-on investment on the continent, that's been the story. When we think about jobs, that's been the story. When we think about geography, that's been the story. And what we've managed to do is, we've got 40, I think we're definitely the highest. We've got 40 founding teams with female founders out of 92. So I'm sure the number of follow-on investments is over $1 billion. Even though, over the last couple of years, it's just been incredible, the growth. But we confirmed 900 million, so we're not going to state more than that. And then obviously direct jobs created, close to 4,000 direct jobs created. And we've done this all over the continent. And what I like about this graph is that what you find is, I think unlike most other companies, our spread reflects economic activity on the continent, right? There's a lot of investors who wish Nigeria was in the center of economic activity in Africa, so they can excuse spending all their time in Kenya and safaris. But it's not the case. and they're going to have to live with that. But you got Nigeria, and you still got the safari stuff if you want it. And you got South Africa. And I think for us, the big challenge going into the future is going to be, can we get into Francophone Africa in a big way? Can we get into North Africa in a big way? So those are our big targets. But what we've done is really cover the continent as a very, very small team. There are people who are sitting on hundreds of millions of dollars handed to them by governments around the world who don't have the investment spread we do, haven't invested in as many companies as we do, and are basically just earning their fees and lining their pockets. But that's not what we do at Future Africa, and that's what really makes what we do extremely, extremely powerful. Next slide. And sort of getting a little granular, you don't need to worry about it. I think the biggest challenge always is, yeah, sure, you can get the seed, but how do you get the growth, right? And I think what we've proven is, again, it's possible for you to do both, right? You can get global investors extremely excited about what we're doing in Africa. And I think that has been the story of the last 2-3 years. As you can see here, whether it's Flutterwave or Andela or Move or 54G, AfriX, global investors are increasingly becoming excited about some of the companies we see at an early stage. And of course, that's where impact meets returns, right? Because as they come in, they mark us up. Sometimes they give us the cash so we can cash out. But it's exciting to see, because this completely changes the story. Next slide. So I want to talk about the collective. And next slide. So the collective, I wish I could put everybody's pictures on there, and I'm going to do it one day. I'm going to find a way to get every picture of every single collective member in some amazing collage. If you know an artist that can do it for me, they got a job. But what we've done with the collective is we've pulled together a very strong community of Africa and friends of Africans, of Africa, that are supporting founders in solving the continent's biggest problems. And this group is really powerful. I don't know a more powerful investment group on the continent, because it's in 20 countries, right? It's in all these different, all these different countries, both on the continent and outside of the continent. It's a group of over 400 people. They've made tons of investments, people contributing as little as 2,500. They've done hundreds of transactions individually, and together, they're sitting in across, 60 vehicles, right? Both in terms of quarterly contributions and deal-specific contributions across 24 deals. The most impressive statistic for me, and the proudest, is that the vast majority of these people are Africans who live in Africa. When we started the collective, because that was how the firm started, it was an email list where we sent deals to every day. The collective is our foundation, which is why this group of people are so special to us. We thought, that all the money was going to come from outside. That was our original thought. People in Africa, we always hear this trope: people in Africa are too poor. They need help. and the collective just proved that. What the collective proved was there is tons of money in Africa. But you know what? Our diaspora has the skills. And when you bring that combination together, dynamite is possible. But we're no longer showing up outside of the continent with a begging bowl, because we got all the money back home. And I'm not talking in terms of kings and queens type of stuff. I'm talking in terms of like actual cash in the bank, because 60% of this $9 million we're talking about came from the continent, right? So our people have the money, but the problem is, we have the money, but do we have the skills? Can we grow the skills? Do we have the experience? Do we have the networks to make that money grow? And that's where we need the help. Next slide. So just giving you a sense of where this money has gone. We've got over 2,000 people who've applied. We've a very curated group of 300. And the way we select them is, we're looking for people who are excited about innovation. We're looking for people who are invested in African development. It's a very curated group, so it's not for everybody. And we want people who are very excited. I mean, as I keep saying, the truth about the collective is my dream is to be at a point where, and we are getting there actually sooner rather than later. It's so funny. But we want to be at a point where the financial obligation is not necessary. And we just focus on who's bringing value to founders and who's not. And now we're getting there. We're already getting there. It was necessary. And when you have 2,000 applications, you got to figure out a way to filter. And sometimes money is a good proxy. But I think in the future, we don't want to do that anymore. We want to find the people who are most excited about working with, building the future of Africa, and just work with them. And they're our partners. They're our biggest partners. They're our biggest LP, as I like to say. The collective is our biggest LP. There's nobody who can lay claim to, supporting African founders and supporting our mission of helping African founders solve the continent's biggest challenges, apart from the collective, which is a very powerful story. There's no big boogeyman in the background, no godfather. I think actually the funniest thing about the collective, so the largest investor in the last fund, I think they put in about 750, and it was a South African firm that was amazing South African firm that's really, really, really grateful for, Alan Gray. And they put their money in with the collective. So they were willing to take their money and say, look, we'll go with the people and put their money with the collective. And that has been sort of our source for the longest time, just working with this group of people. We've never taken money from any DFIs. We've never taken money from any large corporates, always just focusing on working with the collective and working with the people, folks like Alan Gray, philanthropy, and so on, and that has served us very well. Next slide. I've talked about it, so I'll just skip, which is kind of funny. We raised money in shorter period of time than many other funds from the collective. So it's amazing to see. And these are all the industries where we've invested and all the places where we've invested. Next slide. Okay. So something we think about, I just wanted just a quick last, phase. I just want to talk about where we're going as a fund, especially given where the world is, and I'm sure you need to be living under a bridge. You can see tech stocks are falling, Meta has problems, there's so much going on in the world that implies like maybe the run is over and we're ready for the Great Depression. And at the same time, you're seeing an African narrative that's, in my opinion, a little bit tone deaf of, oh, we're all good, everything is fine. We're always going to have money. That's not what we're seeing in the market, by the way, and we see all the numbers. But I think for us, the stock crash, was for us a moment to step back and reflect. And we're very grateful for the moment because, things were getting very exciting, to put it mildly, right? And I think for us, while we're excited, we think Africa needs to be more than excited. We need to be driven by impact. Because there's a lot of stories of people being extremely excited and nothing coming out of it. And so for us, as we think about our future, we're thinking about what does it mean to drive impact in the way that we must over the next 10 years. And we're thinking less about the particular vagaries of today. And for us, the theme for us is how do you unlock African prosperity by investing in time? And I'll get to what time is. And we go to the next slide. You know, we begin by understanding where prosperity comes from. Prosperity is a function of you contributing to a larger purpose, right? It's not a function of, you cannot be prosperous by serving yourself. It's never happened in human history, right? America became prosperous by essentially being the war factory for the Allies in World War I. That is the story, the real story of America, right? Even slavery couldn't make it prosperous. It wasn't until it served a much higher cause of, you know, working with the Allies to defeat the axis of evil, as it was called at the time, that it was able to find purpose, and it became the America you know today, the financial powerhouse of the world, and so on and so forth. That's the history. So when a continent wants to be prosperous, but is consistently asking, what is in it for me? That's a joke. And I think that has been the question that Africa has continued to answer for a very long time. It's never been a question of what can Africa do for the world? So it's been a question of what can the world do for Africa? And so we start from the premise that we must turn that question on its head and start asking, okay, what is Africa contributing to the world? And I'm sure it is in many ways that it doesn't even know, but that's the danger, right? The danger is that because you're a rich man, you know, maybe a rich blind man, sadly, showing up at the doorsteps of your neighbor, dressed in coats of gold, but, you know, handing out the begging bowl, you know, the security of your much richer neighbors are just picking you clean. And then you wear another bunch of gold and lithium and uranium and all that, and you head back out as our central bank governors are doing right now on W Street or wherever the World Bank is, and they're just handing off more stuff in the name of loans. That's what Africa's story has been, right? Without realizing that, well, actually, I hold all the aces. What can I do to actually build on what I have and hand it out? And it's very clever because we've been conditioned to think like this, right? So we always think we need something from outside that we don't have. I mean, while everything's sitting inside. And that was I think that's the biggest lesson for me in the last 5 to 7 years. It's just, we don't really need much from the outside. We need our people. That's all we need back. But outside of that, we don't really need that much. But I like this graph because it just speaks to how stark the relationship is and puts data on the problem. So Africa contributes 3% of global GDP. And of course, the measure of contribution to global GDP is productivity. So employed people typically are the most productive people in a country. So we use this metric we call GDP per person employed to actually understand what exactly is going on. Now, I acknowledge there are many flaws, but again, as Fadikemi will tell you, there's not much economics that is perfect. But just looking at the slide, I just want to point something out. So this is Nigeria, starting out in 1991 at 10,000 for a lot of reasons, including the Gulf War and all of that. So it's mostly pumping out hydrocarbons from the ground and then shipping them out. At the time, you needed a lot of people to do it, but nonetheless, it works, right? And then here's China, right? Less than 5,000. You have India at 5,000, and the rest of sub-Saharan Africa kind of coasting it, right? Now, 2004, right here, this is the year that Alibaba receives investment from Goldman Sachs, right? And I think perhaps that year is the year that maybe changes the history of China in many senses, right? Because out of that wild time, you start to see the Chinese wall, the internet Chinese wall, right, emerge. You have your Tencent, your Alibaba, and so on and so forth. And that investment in digital economy by 2020 has moved them, of course, manufacturing and all the other stuff, Shenzhen, there's all these other stuff that basically moves them up the skills till they're there. Then you got India. This 2008. If you look on this, 2008 is right here. And that's the year that we get Geo. And I think in 2010 was actually the first time that Aadhaar went live, which is the digital identity infrastructure for India. And when you look at those two, you see what has happened over the years, right? To take them to 20,000, right? You basically have a digital economy emerging. And now India is doing so much with their digital economy and continues to go up. And then you got us on the other hand, one of the funniest things that people don't realize is Nigeria has always been a technology powerhouse, right? Some of the first, I spent a lot of time with some of our older ones, and they'll tell you, some of the first MySQL database that could actually include pictures of people was invented in Nigeria by a company called Tara Systems. And that company was actually bought by AT&T sometime in 2004 for something close to $100 million. Obviously, no one's going to talk about it because in Nigeria, you don't want to say you have that much money. So I'm probably casting somebody here, yeah? But we've always been a technology powerhouse. We've actually been. It's not fintech didn't start with Paystack. I tell you that. But you see, we kind of lose focus, because we're on a steady path, and then we get to sometime in, after the financial crisis, of course, we start to slow down even more after that initial incline. And then by the time you get to 2014, kind of lost steam completely. And now we're trying to get back on the up and up. But that's the challenge for the next generation, right? Like, how do we get GDP per employed person up, right? And stop complaining about, why we can't live in London while building businesses in Lagos, right? So we're behind China and India because they've deeply invested in their digital economy and we've not. Next slide. But we have to acknowledge the success. And I say this because it's incredible to have been in the ecosystem over the last 10 years. You could never have scripted what has happened, right? I mean, for me, I always ask myself this question, like, where were you 10 years ago? In 2012, I think I just came back to Nigeria. I think 2013 was the first time, and I spent all my time in CC up 6th floor. And I look at all the people I spent, 80% of my day with at CC up 6th floor, and you see where they are today. And some of us with national awards and all of that. It's an incredible story. There's no Nollywood that would have actually imagined it, especially the cast of characters and all the excitement. So, this Andela is started in 2014. We've got $277 million in funding 2015, a year after Andela was founded. And now you've got 5.2 billion. And you can see the amazing story along the ways. So Africa is indeed coming of age, right? We're starting to invest in digital economy, but again, it's external capital, it's young, it's small, it's not quick enough, it's not fast enough. These are all things we need to fix over the next few years. Next slide. Sorry, am I missing a trick? Okay. So one of the things we started to do at the beginning of this year was, okay, we need to develop a framework, right, for investing in the digital economy in Africa. Because the worst thing we can do is just say, we want to invest in the digital economy, and then all sorts of different initiatives pop up. And there's some really good frameworks out there. So this is just adds to them. I love the World Bank's framework. One of the few things I love about the World Bank. They have amazing research. World Bank's framework for the digital economy is an amazing piece of work. And then we use it all the time in our research. But again, it's not very helpful when you're investing because half of the things that are there are things that only governments can do. And you're not quite sure how to help them. So we developed this framework for investing in Africa's digital economy to unlock African prosperity. And the first one is talent, right? How can we, as societies, build new global talent pipelines for African youth, right? And what I'm talking about is far more revolutionary than what we did in Andela. Because I think what we did in Andela was great, but I'll think about it as it's version 1.0, right? It's small, 100,000 young people, maybe 200,000, maybe 60,000 of them get jobs, 1,600 of them make it to our own platform. It's great, but it's just a tiny measure of what is possible. What I'm imagining is a world where as soon as kids get into school, right, they start to learn digital skills. By the time they graduate at 18, they're great coders, they're great VFX people, they're great data scientists, and they can decide whether they want to spend all their time working or spend all their time researching academic subjects with the obvious skills to take it as far as they can, or do both, which I think most of them will, given the financial constraints of being in a purely academic situation, right? And I think that would be amazing for the world when you have a world where 60, 70% of people work on the internet, live and work on the internet from Africa. But then to get to that kind of scale, you got to think about what infrastructure you need. And that's the other theme for us, How can we deploy the right digital and physical infrastructure to power Africa's digital economy? And when we're talking about infrastructure, quite clearly, we're not talking about roads. I mean, roads are important. If you can get them built, please do. But that's not what I'm talking about. I'm talking about internet connectivity, right? I'm talking about building talent cities that are optimally designed for people who work on the internet, right? That's not a lot of community, so the roads don't matter as much, And there are other things, servers. You got to get servers in place. You got to get, telephony working in a different kind of way. So we're thinking a lot about that. All the hard stuff that people might not want to touch. You gotta get financing infrastructure that can communicate with the global economy. Because these days, if you have a big bank account in America and you send money directly to Nigeria, in 5 days you might get a notice saying you've lost your bank account. That can't work if you want to engage with the global economy. The third one is markets. And we think a lot about markets because one of the biggest challenges with Africa is it is a fragmented market for both demand and supply. America, one of the things that America gets right is the creation of trusts, right? You got 6 or 7 companies that basically take care of a sector and everything else is owned by them. Many people think it's a bad thing. I argue it's a good thing that you can get 7 people in a room and make a decision. And you think about what fragmented markets have done to the world, and even to America very early on. We think about the railroads when everybody and their mother had a railroad. It's very chaotic. People died, right? Because of all these rail crashes, very hard to enforce standards. You didn't have large enough companies that could be managed properly. Things went bust, things went under, like that. They had tons of runs on the banks when America had all the banks in the world. Everybody could set up a bank trust, everything. But now what happens when you can actually build what is coming, which is the great consolidation. And I'm super excited about it because in these market times, that's the next step, right? Got to have the great consolidation happen. Yeah, got to. So how do we innovate new approaches to aggregating demand and supply in fragmented markets across Africa? And then the last thing is the environment, because it's my firm belief that you have to grow your way to net zero. Anybody who's telling you that you change people's way they live and all that to get to net zero, I think they're being dishonest, right? I think you need to grow your way to net zero, which means you have net zero ways of doing things. Now, in Nigeria, for example, we've got a natural net zero, which is the fact that our public utilities don't work. So So everybody got to be decentralized anyways. And because everybody has to be decentralized, everybody's using solar, right? And you have a country like Kenya, which one of the few countries with public utilities that works. You know, they're geothermal and they're solar, and that's 90% of the electricity needs, right? You don't have a coal power plant that can stay up. That's a good thing. But we got to be very innovative about it in three particular ways, right? For me, it's, you know, how are we making products, right? What can we do to make products that are net zero, that are carbon neutral, right? What can we do to make food in a way that's carbon neutral? You've got a coterie of smallholder farmers. That's better for the environment, right? How do you help them to be able to engage with the global markets in a way that's profitable while they remain small? And then finally, obviously, energy, which is the obvious one. How do you make sure that, you know, we don't go building coal plants all of a sudden? And we never need to, right? Next slide. And I'm just going to end, you know, one of the biggest things that's informing our new direction is what we've learned, because, you know, we always have to learn and reflect. It's our strength as a company. And Fund One, you know, we started investing out of Fund One in 2014, and it was really just our capital. You know, we put our own capital at stake, and it helped us a lot because it's been a foundation for us. But, you know, we didn't have a lot of money. And so even though we had a bit of capital and we had some say-so because we're in the management, we had limited steer. So when we left the companies, we couldn't do very much. And so I would say, you know, sometimes what that meant was that perhaps we had a vision for the company that was different from the management that's there right now. And it's not bad because we did get good financial outcomes, but sometimes it's also painful because we didn't get the impact we wanted to the extent that we wanted it. And in Fund Two, we really focused on, you know, hard problems in large markets. We started to build capital. We started accepting outside capital for the first time in 2020, really. We basically led on building a new kind of venture fund that is not backed by institutions, but backed by people. And that has completely revolutionized the space. Now you have everybody with a collective, and that's great. That's the kind of impact we want to have when we say we lead with courage. But very quickly, we want to know when to also leave with courage. And then, you know, we did a lot more deals and so on and so forth. But I think the biggest weakness of a people-driven investment club is you're forced into consensus activity at the end of the day. You got to get, you know, people putting their money, it's their money, and not everyone's going to have the courage to go make a big bet on, you know, building a new city or building a new kind of MVNO network or investing in education, innovation. You know, everybody wants to do fintech, which is fantastic, but it's not the only problem we have. And so I feel like sometimes that constrains you, right? The next slide. And what we've also learned is, you know, we've got a lot of winners. Shara's here, so you can see. You got to bump yourself up. We're working at it. But I think, you know, what we've learned is that, you know, our winners have followed a common path, right? It's not the only path, but, you know, our winners together have followed a common path, which is that we're directly involved in the building. And so we're going back to those roots. We can go next slide. So we're going back to those roots, and the roots are, you know, number one, we're going to come in with a point of view. So we're no longer doing the deal thing, you know, which is great because sometimes, I mean, once in a while we'll see amazing founders and we want to invest, but the discipline now is basically saying, look, great founder, great thesis, great business, but that's not all that matters. Does it fit our point of view of where we need to take the continent? And so we're going back to being very extremely thesis driven while we support everybody else. Second thing for us is, you know, we want to be very early. So I like to say a lot of funds would say, if you don't have traction, don't come to us. I'll say, if you have traction, don't come to us. Right? And what I really mean by that is, We want to see you before you have traction. We want to see the companies when they're very early and risky. And then we want to work with the company to focus. But that obviously means that we can't invest in as many companies. So it's going to be a very small fund. We're going to be a lot less deal heavy and a lot more thesis driven. The third thing is we want to be a meaningful minority. So increasingly we find that, it's really important for us to, both for governance steer and for returns, to take 15, 20% of the companies super early on. So that's going to be our mandate. So we're just going to focus on 20 companies taking 10, 15, 20%. And then finally, we're going to do whatever it takes to get to where we're going. And by that, what I mean is we may do deals that don't look like venture capital. We may do take privates. We may do PPPs. We may do sell bonds. I don't know, right? But our mindset is we cannot limit ourselves to institutional and structural straitjackets invented in DC and London, right? Or California, as the case may be. We got to do whatever it takes to make sure that we can achieve our goals. Next slide. So I'm going to skip over a lot of this because we don't have a lot of time. I'm out of time. But ultimately, nothing has changed about how we do it. Right? So it's still capital, it's still coaching, it's still community. We can flip through them very quickly. Let's go to capital. Again, we're still taking companies to $1 billion. Less of them directly, perhaps more of them with an ecosystem. For example, we're going to be backing funds. And we have Julia here from Future of Learning Fund, where we're co-building a fund with her that focuses on learning investments. But again, nothing's changed about how we do it. Again, coaching, we're going to be more deliberate about working with you from idea stage, working with founders from idea stage, and really taking these 5 things extremely seriously: storytelling, team, product, growth, and fundraising, right? And our community is going to grow. So right now we started with the peoples, as my daughter likes to call y'all. But we're going to expand. We're going to start getting more involved in government and working with governments. And we're setting the right tone with Barbados, which is going to be one of our living labs, one of the places where we can go and experiment with an idea and get things done very quickly, and then show other governments, particularly on the continent, that we can actually do it and we make you a lot of money, and you can improve the lives of your people, whatever you care about. And then also corporates, right? Again, doubling down on our strategy of working with corporates to identify their biggest problems and then scale them out. And in fact, this is where the collective becomes even more important, because we're not in the corporates. We don't know what the biggest problems are, but if we can talk to you and you know what's going on in those corporates, we can engage you and find solutions to those problems. Next slide. And then, we got this philosophy, and I'm just going to end here, because for us, everything we do is rooted in philosophy. We're a very philosophical, thesis-driven firm. And for us, the way we believe that venture is different in Africa from the rest of the world is that venture is not an individual sport. In America, you've got this really funny list called the Midas list. We'll end up there one day, but I hope we end up there with all of you. But what we've learned is you can't ascribe the success of a company to one person. It takes a village to build a unicorn. And so we've developed a philosophy around how we know we're doing it the right way. And that means, first of all, we're understanding the industries we're investing in. We're not just looking at deals, because we've got this magic entrepreneur that can go the way on their own and do whatever they like. We're not investing in just a magical founder. We're investing in an industry that has a problem, and we want to work with the people in that industry to make things happen. And we're doing this as early as possible. And of course, we're nurturing that environment with the community, right? It means people who can advise us on the businesses. So we're going to be pulling in our community, the collective, to help us think through the businesses that we're building, even when they're idea stage. And that's why we're removing the limitation of a financial commitment, because sometimes, the people who've got the best ideas about how to do this may not be in a position to invest financially, but it doesn't mean that they don't, they shouldn't be a part of our community. And we're opening to all. We're becoming even more inclusive. So it means it's not just angel investors. It means it's not just founders. It means it's government officials sometimes sitting here. It means sometimes it's a large corporate having a seat at the table because they've got something to say. Sometimes it's a non-profit. Sometimes it's a user, a consumer on the street, and want to open more. Sorry? They're welcome. They're always welcome. They force their seat on the table anyway. They're okay. It's rooted in trust. So for us now, trust becomes an existential thing because now we're dealing with ideas at the very embryonic stage. So obviously there's things we can't say, there's things we can't do, or maybe a little bit more secretive. And maybe we're working in compartments as necessary. But at the same time, everything is built around this concept of everyone's working towards the same goal. And of course, most importantly, when we build successful companies, we want to find the best employees in those companies and get them to build others. Right? And that's what we're starting to see in our deal flow, which is that some of our most successful companies are giving birth to kids. And now we're going to take those kids and build even more successful companies, including ourselves, by the way. A ton of our team is leaving a good portion of our team is leaving to go build new funds and new experiences and new tools. So again, we're building a tree of African prosperity because we want to go back and plant even more trees. So thank you very much for listening to me drone on for more than my allotted time. How far behind are we? Huh? Okay, so we can take a few questions. I was wondering about that. So we can take a few questions and then we can get back to regularly scheduled programming. Sure. We're not going to convince people. We'll just do it. I think we're one of the things we're really keen on in that respect. Kenya is doing it. We're working very, very strongly on Lagos because if we can get Lagos has 3 million kids in that age bracket. If we can get them to do it, everyone will do it. And in Kenya, we're also trying to support. My sense is this, though. I think the whole focus on computing alone is perhaps what's getting people down. Because, the reality is coding is not that interesting. Let's be honest. And people want to do more things than code, right? Sometimes people want to be able to make TikTok videos, and that's okay. You know what I mean? So I think we need to broaden the lens to digital skills. I think that's one of the key reform areas. And we need to move it away from just coding. We need to say, how can you, from age 7 to age 18, start to build digital skills that can help you make money on the internet, right? By the time you graduate from high school. And that means more than coding. Maybe it means you can edit videos. Maybe it means, so we need to put people on different tracks. And that the work that needs to be done, my thought is not enough work has been done on the curriculum and how to make that more engaging. And so we're working on that, as well as building a financing model. And I think that's a big problem because oftentimes what these opportunities tend to exacerbate is the digital divide, sorry. And because some kids will get the resources and other kids will not. So how do you make this more equitable? And I have many ideas on that, including what does it look like if we put a computer lab in every school that's funded by fees, but that don't necessarily have to be paid by the kids. And how do you build an entire, out of that, a trust for digital, for teachers, because teachers are also going to be left behind, especially those in the less resource schools. And then also, how do you engage the schools themselves? Because they're, rather than going to build new infrastructure, which is one of the dangerous things we do in Africa all the time, we solve problems over and over again. You know how many times Lagos Ibadan Express Road has been in the budget for Nigeria? Could have built 10 roads. So we like solving problems again and again and again, and doing a conference and solving the same problem. So what we need to do this time is really think carefully about, instead of solving the same problem again and again, how do you finance the schools that are already here to be able to do this work, as opposed to taking that away from the schools and trying to build an alternative education system just to teach digital skills. So again, I'm fully in support. Needs a bit more work. And look, one thing I'll tell you, if you want to humor yourself, right? Go back on the internet and look for comments about Fora or Andela between 2014 to 2016. And then look at the companies now. So in fact, I think it's a great sign that people are pessimistic. I would be very surprised if they were very optimistic about it, because it means that, there's no opportunity there. So I'm not necessarily sad about that, but I think there's work we have to do to prove them wrong.
Models of learning. Let's welcome Julia. All right. And next we have Mr. Boom III Jr., who is CEO and co-founder of DABA. And lastly, we have Mr. Tembite Ermias. He is an independent consultant with 20 plus years of experience in development finance, private equity, international development, and management consulting, with a focus on Africa, of course. Welcome to Tembite. Okay. Oh. It's a fraction of what you gave, but I'm sure you'll expound on that. Bumi?
Excellent. Okay. Welcome, everyone. My name is Bumi Otegbade, as has been said. We're going to discuss how all of you can become billionaires. That's the discussion. So it's just me too, I'm interested. So they are the ones that will tell us. And what I'll do is just structure the panel and then remove myself so they can have a real conversation. So we'll have 5 minutes of just quick introduction, 10 minutes where they kind of tell us what they're doing and how they are planning to build or what they're building. And then a sort of 15 minutes of discussion that hopefully digs a little bit deeper, and then we'll have Q&A. But there's some point in the discussion where I hope that if you have a pressing question, raise your hand and ask that question, okay? We really want this to be a conversation. Don't forget, the whole point is, how do you become a billionaire from Africa's most difficult challenges? All right. So to kind of kick this off, I will just introduce myself real quick. But before we start, I know we're here to discuss Africa's prosperity and Africa's future, but I don't want us to lose fact or sight of the fact that there are difficulties. The war that's going on right now in Ukraine on a global level, and in Ethiopia, the coup in Burkina Faso, and the different lives that are affected. I want us to keep those in mind. These are real situations that we should all be thinking about solving in one form or the other. Okay, so when I went to college, I went to Baylor University in Texas, go Bears. I was forced to read a American literature, and I read Ralph Waldo Emerson, and he had this essay that was mocking travelers of the U.S. travelers. You go to Rome, you go to Greece. Those people that were traveling up and down, is that how, did you build your country by traveling all over the place? That was the summary of that essay. And I think that inspired me to go back home immediately after college and build. So I spent, about a decade alongside, many people in the room here. I was focused on talent, especially at the bottom of the pyramid. How you get a young person from the slum to go from 20 cents an hour productivity to $5 an hour productivity. That was it. How do you do that? And how do you do that in a compressed time frame? And it's on that kind of journey I met people like E and others in this room. So today, I'm trying to find my next space. So I'm coming off of a bit of a sabbatical, if you will, and trying to find where I play. I have gone into this idea of the global African. When you think of the global African, Ngozi Okonjo-Iweala comes to mind. They're as African as they are global, right? And in terms of their power, they own it. They own their narrative, they own their capital, and they own their agency and how they just do everything. So that's one of the ideas I'm trying to develop. And one of the areas that I'm most interested in is how do we take scientific innovation and commercialize. So a couple of the investments that we've done, you guys saw 54 Gene in I's talk. We invested in one called Yamachi in Ghana. They do genome sequencing for cancer, right? Just for biomarkers for cancer. Those kinds of innovations, how do we bring them into the fore? And because I'm somewhat academic and I did political science research, I'm also trying to figure out, okay, how do we kind of coalesce, right? Our talent, and he said it best. We just need our people back. We don't need grammar. We don't need English. We need our people contributing. And if you look at the development trajectory of China, it was Chinese FDI that pushed it. India, it's the talent, and we really it's not a mistake that most of the CEOs in tech companies are Indian here in the US. So that is me. We're done. Now, I will have each of our panelists introduce themselves, just 1 minute, 2 minutes, about kind of, so we understand who you truly are. Now, here's the question you have to answer to bring that out. Tell us who you are, what you do, etc. But also tell us what one skill, talent, gift do you have that if you didn't have it and you saw it in another person, you would want it. Should I say it one more time? Tell us one skill, talent, or gift that you have that if you didn't have it, you would really desire it, along with your name and what you do. All in 1 minute. All right, so we'll start with Julia.
Do I just like that? It's awfully loud. Okay. Thanks for the stimulating question. Sorry. Is this working now? Okay. I don't think we really need it, but I'll. Okay. As already said, I'm Julia Moffett. I am Nairobi based for almost 10 years. Safari capital of the world. Thank you. The great endorsement of Africa. Hi, Julia Moffett, Nairobi based for almost 10 years. Managing part of the Future of Learning Fund, which we'll talk a bit more about, obviously. Background in government, public and private sectors, US, UK, and Africa. And have been wanting to do this fund for a really long time, and it's only recently become the timing making it possible, including doing it with Future Africa. Skills, I spent the first decade of my life in the White House and National Security Council down the road and managed sort of internal micro campaigns for every priority policy agenda of the president. And I think that gave me a skill set that isn't afraid of doing hard things and believes the impossible is possible. And I think that's probably contributing to letting us stand up the first thematic fund on the continent focused on the future of learning.
Amazing. Hello, everybody. So my name is Boom, and I'm the CEO and co-founder of DABA. So DABA, we're building the investment infrastructure for Africa, starting with what is very similar here in the US to Titan. So Titan is an investment management application, but on the back end, we are developing liquidity operating system to settle transactions across multiple African capital markets. So that's DABA in short. My background, fintech software engineer, worked for NASDAQ 5 years, building exactly these types of solutions, both for public markets and private markets here in the US, and tapped also into the European markets. MBA from the University of Chicago, focused on finance, entrepreneurship, and strategy, and very passionate about entrepreneurship in Africa. Before starting DABA, started a nonprofit called Africa Startup Lab. We were focused on entrepreneurial support, mentorship, and community for close to 800 entrepreneurs across 15 African countries that we did fully virtual and remote. So that's a little bit about me. In terms of one skill set that I believe I have that I would love to have if I saw it in somebody else, that was the question. I think it would be grit. I'm just thinking about all my past experiences. I think I've been on this entrepreneurial journey for the past 5 years now. This is my second company. I think, and also while working in corporate America, I think grit is one of the characteristics that I exhibited and continue to exhibit that I would love to have if I didn't. So that's my intro. Thank you.
Well done. Boom. It's very hard to follow that one. But what he didn't say also is that he's from Cameroon. You didn't say that. You should say from Cameroon because the flag tells it. I'm from Ethiopia. My name is Chinyere Inya. I have, let's see where to start. So I'm from Ethiopia. Let's start there. For the last 20 years, I've been a management consultant. I've been a development financier. That's what I've done. My background and training was in mechanical engineering, but I realized, I see some mechanical engineers in the room. I realized that, what it teaches you is how to solve problems, but that the world has problems that are more than Bernoulli's and others. I started my career with the Boston Consulting Group in California, and then was in Houston, Texas, then in Dubai, then in Johannesburg, where I ran the office for BCG. Then I joined McKinsey, which is kind of leaving Pepsi to go to Coke, because they wanted to open an office in Nairobi, which is close to home. And so I was keen on going back home. And so I helped McKinsey build that office and worked throughout East Africa. And as I was doing that, I came across the world of development finance, which is a very interesting world because it's one that's trying to balance capital returns with impact. And I mean, there are many things that can be said about it, and the sources of that capital being in the capital cities of Europe. In fact, a friend of mine said, "You're going to go work for the Queen," which it was because I joined CDC, which was the British Development Finance Institution. For the last 4 years, I was the head of Africa for CDC. I'm proud to say that I think we've made a big transformation in that institution. And that will reflect in the theme of what I will talk about also, because when you say, what skill do you have and do you think might be of value, or what I would have valued, or well, the question you asked, the answer, for me at least, is, some have called me a culture chameleon, in the sense that the ability to live in different cultures and among different people and build bridges, and to actually think always about Africa, but to actually live and be with others and integrate them into the way that you try to make Africa succeed. So if it takes working for the Queen, I'm fine with that, because actually I'm working for the Queen, but I'm working for Africa at a deeper level. And that to me is something that everybody in this room, whether you are African or not, that makes us kin. And I think it's something that whatever you do, you could be at Amazon, you could be at the White House. If Africa is something that you care about, that is something that I think makes a difference. So anyway, I'm sure we'll talk more about it, but it's a pleasure to be here, and thank you for having me over.
Okay. Excellent. Thank you so much. I can confirm that Tembite is a cultural comedian. I was telling him that, my roommate who just moved back to Ethiopia is Ethiopian, And he's like, "Oh yeah, my roommate is from Ibadan." I was like, "Okay, well, I guess." And then he said Bawuni, and then I said in Demnadesh, which is talking to a woman, right? It's completely missed it. Anyway, just yeah. All right, so we're gonna talk about this global economy, right? And maybe Tembite, we start with you. What are you building? What are you working on right now, right? And a second context to that question, and I want to bring you back to something you had said in our prep call, which is 10 years ago or something, McKinsey and Co. wrote about the lions on the move, Yeah. What are we saying now that we were not saying then?
So, the lines on the move. I mean, I co-wrote the second one, so this is kind of a loaded exercise to actually answer that question. But I think it's right, and I think we should ask ourselves. And E touched on this. Africa's rising is something we've talked about for a very long time, and that is not something that's new to anybody here. I think the key of what's different now is that we've tried several things. I think that there's a lot more experience collectively. When I say we, the financiers, the entrepreneurs, the investors, the frankly, the children who are young and now who have grown and who've actually seen the world transform. All of that is very different now. And what I think that means is that there are many more opportunities that we couldn't see before. There are also lessons that we've crossed off the list now, and that we've come to understand as not being perhaps the right answer for the challenges that we face. And so, tying that to what you said was your first question: what am I doing now? At CDC, which is now called British International Investment, so it's BII, and I might use both terms, where I just finished up. We spent quite a bit of time developing our outlook of how can development finance institutions help grow the private sector throughout Africa. Africa is a core geography for us. But also, how can we learn from the experience of the last 70 years of trying to help the private sector grow? And some of the lessons, without going through all of them, I think are include things like the growth capital in a private equity fund sense in the African context doesn't always work, because exit paths are very limited. So if you come in and you provide capital with the hope that you might actually list on a stock exchange, because that's typically what an investor is looking for, it's very limited. What that also means is that if, as an investor, as a public investor, the development finance institution, you're looking to bring private capital in, encourage them to follow you, they are not interested in that. If they cannot exit, they will never come. If you are a private equity professional in Africa, you can mention, many of them, Helios, DPI, others, African Best. You have these closed-end funds. You end up 10 years down the road. If you cannot exit, it's a very difficult proposition that you have as a partner in a private equity firm with multiple funds. So we have learned, as some of the creators of that world of private equity funds, that actually maybe that's not the right path. We've also learned that growth capital itself maybe doesn't work, because if you're looking to write a check of $10 million, there are only so many firms that have the ability to absorb $10 million in the African context. Our markets are fragmented, right? That's your M in the time framework. So any given company can only grow so much, because even Nigeria is not that big compared to India, compared to Brazil, compared to the United States. So you need to think about new kinds of products. You need to be thinking about not deploying $10 million. Or in fact, at CDC, it was $20 million minority. So which means that you end up needing to be a very large company. So how do we think about earlier stage investing, which is what Future Africa is looking at? How do we think about smaller check size? How do we think about more venture thinking, which is, seeding many more with the expectation that some will succeed, because that might be actually more useful to the ecosystem of talent, rather than trying to grow a few partners at a few private equity firms. So these are some of the things that we learned and that we are now starting to integrate into the way that we do what we do. So your question was, what are you doing now? I mean, what we're trying to do is learn from all of those things and see how the DFIs, which I think have a role to play. I mean, E and I, we can discuss, they maybe are not as useful, but I think that, back to the chameleon point, Africa needs everyone's participation and contribution, including the DFIs, including the colonial DFIs. And if it means we need to go inside there and help shape it, so be it. That's fine. Because in the end, what matters is Africa. Let me stop there.
What are you doing now, and how are you?
I'm actually solving all the problems that he mentioned. So it's actually very funny. So what we're building, like I mentioned earlier in my introduction, is investment infrastructure for Africa. If you think about markets, capital markets are in the developed world, in the US, in Europe, China, are the way by default whereby people can build wealth, right? You go on the stock exchange, you're trying to, compound your money over time. That's what, when you give your money to pension funds or to your 401k IRA, that's what they do. They invest in on the stock market so that 30 years when you go and retire, you have some money. Unfortunately, when it comes to Africa and a lot of other emerging markets, these capital markets are inefficient. They're not well developed. They're under participated, under invested. Hence, lack of exit potential. So what we're doing is we're attacking the problem from two fronts. Our big vision is to build a full stack, but understandably, that's a larger undertaking, which we cannot do from the beginning. So what do? Is we're starting with the top of the stack, which is aggregating capital and guiding that capital into the best opportunities that exist in the African capital market. So our application today is it's a smart investment manager, whereby you come in, you open an account on Daba. We ask you about 13 questions that allow us to determine your risk profile, which constitutes risk need, risk capacity, risk tolerance. And we essentially guide you into your investment experience on the African continent. Today, we are offering two asset classes. The first one is venture capital into tech companies. And the second one is public equities in the Francophone West African capital market. And the goal is to introduce you into other asset classes over time that will match the investor's risk profile, such as, could be a real estate investment trust that is publicly traded, could be government-backed securities, could be other types of like private debt. So there different types of asset classes. There's about $1.5 trillion. That's the size of the African capital market. It's estimated that is much larger than that. But in terms of what's tracked, and all of that is completely on top, off grid, and not available for people to build wealth on. So we are looking to bring that online and into people's wallets. So that's pretty much what we do and how we are helping people build the African future. Because if we make it easy for people to invest in the best opportunities, on the continent, that is pretty much the essence of prosperity over time, because we've seen that work in the US and in Europe, and why not do it back home? Question is, does it work?
Does this work? It does. Yeah, it's the same question, but inside it, and maybe you would have to think about it as well. Two difficult problems that people really have option to at the right place. So same question for you, but why not include two stories? So two very difficult problems that people can start to get there as well.
I can do that one. Great. Sure. So to sort of recap the introduction, the Future of Learning Fund is a $20 million early stage venture fund. The language is very important, investing in new and improved models of learning that deliver education at scale and prepare Africans for the future of work. We are a thematic fund of Future Africa and the first dedicated EdTech fund on the continent, feeling that this is the right time to be first mover at the beginning of the uptick of the S-curve. $57 billion market by the end of this decade is estimated to be in Africa. I think just some grounding principles, and then I can get to perhaps two examples. The fund is, first of all, is a thematic fund of Future Africa for a reason. Not only is leadership and vision of Andela as a foundational leg of the stool, now the focus on talent in the time framework. Of course, how are you going to have the talent if everybody can't read and write or is skills adjacent, et cetera? And then thirdly, really pulling out, because there's going to be a lot of ed tech investing activity on the continent soon, the focus and attachment to market creating innovations, and really saying this isn't just about an ed tech fund that's going to invest in a growing middle class doing co-curricular activities for their kids, but it's really about addressing some of the most fundamental problems with solutions that didn't exist before. We can talk about what they are. The fund is really grounded in, I think, three important points. One is we are witnessing a global reinvention of education that is probably one of the greatest transformations of a sector any of us will ever see in our lifetime. And it's about a transformation of education is now becoming learning. Learning is now becoming personalized and adaptive and therefore better. Learning is now becoming skills and competency focused, and the silos between education and employment are going away. This isn't just about tech or tech enabled. This is about faster, cheaper, more relevant pathways to employment. And some people would say we are witnessing an entire rebuilding of a new infrastructure of learning in which a skill is now going to last 2-3 years. And it's a super, super, super exciting time. It's a super exciting time globally for equity, for skills-based hiring, for the cost of education, et cetera. More relevant on the African continent than anywhere in the world for reasons that everybody in this room knows. Billions of dollars invested every year into education on the African continent, skills, learning crisis deepening, skills gap widening, average time it takes a tertiary graduate in sub-Saharan Africa to find a job, 5 years. You cannot build brick and mortar schools fast enough anymore. And to our earlier conversation, it is not clear that public systems are agile enough to reinvent themselves fast enough to keep up with the rapid pace of change in technology in the workforce. And that's true in Chicago, Illinois, as much as it is in Lagos. It's not a rich, poor, north-south debate. It's just more relevant in the African context because of size and leapfrogging potential. Why would you want to keep building educational strategies that are now being reinvented in other parts of the world or being declared antiquated? It doesn't make any sense. And you actually can't do it fast enough anyway. So the real proposition of the fund is that you're witnessing perhaps a generational opportunity that has never existed before, to your question, in which you have population size, as you know, digital infrastructure, as you know, increasing urbanization, now combined with post-pandemic tech-enabled scale-focused learning solutions that are becoming widely accepted overnight. And that's going to change our ability to deliver exponential, not incremental change in education. And it's going to make it more skills focused, more connected to jobs. And those jobs, to E's point, are now part of a global distributed workforce. That has never been the case ever before. And so it's a very exciting time. I think that's probably enough. I can do the examples in the next.
Excellent. So, I would like to put a little bit of structure on using the country, right? There's very good and they are good, right? Whether it's structure or how the market, we set the all. The general philosophy and go and find the opportunity. Somebody said before yesterday, showing growth rates for African countries in 2024. Slow, right? Because I know this person is going to be good person. I reply that there will be a opportunity. And then the person said, well, I think there'll be a good person because you keep thinking. So let's home in on arguments, right? Someone like hey, Ori or Koro, famously too, get an entrepreneur around, certain type of problems. So the question, what where are they from? And that's where you can use them to get that friend out or now to maybe we'll get that.
So maybe I'll start with I think two areas: climate and food security. I mean, big areas, and clearly there's not one startup that's going to solve either of these two things. But I think in the African context, there maybe are two possible examples that could be interesting. Um, on the climate side, we have one of the assets, and the theme tying these two perhaps is also assets. Thinking of our assets, what are the assets? We may not recognize them as assets, but perhaps they are assets. So most of the times our smallholder farmers are a liability for us. Oh, we have smallholder farmers, so we can't do what everywhere else is done in large commercial farms. But in the climate world, they sit on small pieces of land which have some climate positive potential. Now, you cannot get all of them to participate in climate marketplaces because there are millions and millions of them. But is there something that asset could provide to us? Is there a solution that could allow us to tie together all of these different assets? So then suddenly you can bring those credits onto the market, something that you could actually trade, something that you could actually get them to get something out of, because it's going to happen anyway. They're going to farm that land. They're going to plant the shade that's needed for it to grow there, whatever it is. So an example, I'm saying, and maybe there are solutions on this, but this is something that is an asset for us, not necessarily a liability. Another example could be, I was listening to the other day on BBC World News. Again, like I said, if they collect news, I'm listening to it. I don't care if it's CCTV or if it's BBC or RTU or RTN for that matter. But one of the things they were talking about was fonio. Now, those of you there's plenty of West Africans here. I don't know that there's any people from Guinea, because I think Guinea apparently produces 75% of the world's fonio. Now, for those of you who don't know, fonio is a very tiny grain. It's not unlike teff, which you may have heard of, which is from Ethiopia, also another small grain. It's from the millet family. It is eaten in several West African countries, including the Nigerians. I mean, you guys also know it. It is drought resistant. It grows. You can basically, if there were a nuclear war, there would be cockroaches and fonio. It's like really resistant, but it has incredible characteristics. It's gluten free. It's very nutritious. It comes to, I didn't know this, I think in 60 days or 90 days, it does a crop. Every 60 to 90 days, it produces a crop. It's a small grain that is eaten in West Africa, nowhere else in the world. Now, as Russia and Ukraine and wheat, the whole discussion was actually about Senegal and baguettes in Senegal and the issue of baguettes in Senegal, given that there's wheat constraints. And this was an amazing woman who was being interviewed, a baker who was adding more and more of fonio and other sorghum type things to blend the bread. Now the Senegalese are like, it's not the same as the baguettes, but eventually she is trying to change the way that all of this ties back to, it's an asset we have, which actually is an opportunity. And frankly, teff, which is from my country, also an obscure grass, which, nobody eats because it's a grass. Now you go to Whole Foods, you can find it there. It has also nutritious value. These are assets that, because we were not told, fonio apparently was called, poor man's rice or hungry rice. This is what the name was given by the Europeans, because they were used to rice, and when they came, this is what they found, and so it became hungry rice. We accepted that it's actually hungry rice, and so now we say that we don't make our baguettes out of hungry rice. So the point is, these are assets. I'm not trying to, say there's good or bad here. I'm saying is we have to understand we have assets, and that's what, to me, Yi was talking about solving problems. I'm also talking about making use of assets. And those are the kinds of things that only if you have this blood in your system do you know fonio. I mean, I didn't know about fonio because where I'm from, it's not something that exists. And somebody from Washington, D.C. wouldn't know it. But this group and many others know about it. So think about what are the assets that you take for granted in your own cultures, and are there opportunities linked to those that the world might benefit from? And last point on this, and I'll leave it. Another reason for the culture chameleon, which sounds like karma chameleon for those of you who are old enough. But another reason for that is trade is important. You know, we cannot isolate ourselves, certainly not from each other because our markets are way too small. Africa is too fragmented, but even to the rest of the world. So it always has to be not just about being self-sufficient for Africa, but also be about bringing something that the rest of the world values. The rest of the world values carbon credits. The rest of the world values alternatives to Russian wheat. And there is no reason why we can't use some of these assets in the same way. Yeah.
That's absolutely great. I'm resisting the urge to add some commentary at the now and then. But how many people know Ashake? Thank you. That G music, you need to look at that. That is one of these happened. That you go from that region in Nigeria, this is like international culture. You guys should really look at that. But I think that one of the okay.
All right, tough to go after actually. But when I think about two examples or two things really, that I would like to leave people with is when it comes to investing, investors care about access, knowledge, and infrastructure. Access to the best opportunities, knowledge as to what is the best opportunity, and can I get my money in and out. We have problems locally in terms of how do we activate Africans on the ground, being able to invest in the best companies, preserve their money, and grow their money locally. Which I resonated a lot with what you said. There's money back home, but how do we activate it? How do we grow that? On the flip side, we have a very wealthy diaspora that's super well educated, has a habit of investing, has a habit of remitting money back home. How do we get that diaspora invested in the best African opportunities? So what DABA is really doing and how we're trying to position ourselves is we're telling to the diaspora, we're telling them, hey, you have historically maybe lacked access or information about what's going on. So here's your opportunity. And the story here is when I worked at NASDAQ, I saw that 99% of the data that we managed and gave asset managers, pension funds, institutional investors was US, Europe, Asia. 1% was Africa. Out of that 1%, maybe 90% was South Africa. So I kept asking my managers, I'm like, yo, like, is anybody investing in Africa? Like, why are we not aggregating the African data? Like, just imagine if you were here and you knew, Future Africa's fund performance, other VC fund performance, other private equity fund performance, institutional fund performance. You could say, okay, cool. I like these guys. Here's where I'll put my money because, historically they've performed well in things that I care about. But that doesn't exist, right? Because that information is not being aggregated. That information is not being made available to investors that care about Africa. So that is essentially what we're doing. But we're doing it at a macro level whereby we are going and partnering with these banks, brokers, asset managers, investors that are investing across multiple asset classes and saying, hey, what has been your fund performance? You've been successful. What are you investing in? So that we can bring the public that wants to invest into these asset classes along. And retail for us is the entry point because that's the people we can easily talk to. Now, to Ian's point again, you need to have, and to your point, you need to bring institutionals, right? You need to bring, but institutionals have a different mandate, right? So the story here is pretty much we provide access and information to activate capital here in the US that is willing to invest in Africa, but historically has not been able to. And so that's pretty much the story for me. So yeah, I'll pass it on to you.
One more. Professor. One of the ones I'd like to get is often and how we talk to sudden knowledge. We are not only consumable, we can turn into activity. So this general idea of how we can get access to information, and not just that, right? It feels like we take that commodity of knowledge and information, we really get down all the way to the last thing that we learn on. One of the ideas that I come to and in terms of our talent development, healthcare for different education. So you're investing in learning spaces for that, learning spaces. What are some of those most difficult problems that we see, right? And I personally would rather do it at shopping if you haven't. But then I don't. Well, please go ahead. What are any key problems or issues that you're really seeing in practical problems that people are tackling all the time to use tackle with meeting this asset?
Great question. So just a little gating parameters of the fund. We invest in what's called pre-K to gray, for those of you not in the education space. So across the entire learner life cycle, and in and out of school, probably with as much, if not more, that we're seeing is out of school learning than in school, just to do some things. And it's sub-Saharan Africa, largest markets. Although I just want to say I was at a conference in London earlier this week, and I went and approached the panel on DRC afterwards to say, here's my card in case you see any education businesses, ed tech businesses. I have over 10 businesses, and that was on Tuesday, sitting in my inbox from DRC. So super excited about that. I think in terms of just some of the big hairy problems, and then try to tell a story or two of what we're seeing inside of them. Clearly, the focus on education for so long has been on improving access, and now it turns out we've improved access, but children aren't learning anything at school. That's a bit of an overstatement, but it's also documented. And so any types of tools and technologies that are helping to improve learning in schools in the current environments. And what I think it gets really interesting are solutions that you're seeing that help teachers be facilitators and not fake experts. You can't fix this teacher challenge overnight. You can't hire or train enough teachers for what's needed on the continent. And so we're starting to see and starting to invest in companies that make it super easy for a teacher to be that much better. So Reflective Learning out of South Africa goes in and can do an assessment on your math capability if you're in year 8 and the teacher is a year 8 teacher, but this assessment tool can figure out that your gap is in year 3, can catch you up overnight. Teachers love it. It has 100% retention rate being used by thousands and thousands of students in all different kinds of schools. We're looking at another company, to E's point about tech skills for young people, that says you teacher are not going to have time to go and learn all this yourselves. So we're going to make this super easy for you. We're going to give you a short course. You're going to become accredited as a tech talent teacher for young people. We're going to create a gateway that's almost an online school. And that's what I want to say, is that I don't think we know, but I think we're starting to see that there's some really interesting mashup coming of high quality content through almost online schools into local environments. So talking to one online school, Cambridge Education, not university, Cambridge Secondary, Cambridge teachers. All of a sudden, there are a heck of a lot of Cambridge teachers around the world that would like to be on this platform. Put it in an African context of a lower socioeconomic household that says, I never could send my child to that school. It was too expensive. Let's call it a gem school. All of a sudden, you've got an online school that's either affordable, the child stays at home, or if you don't like that, it turns out that the churches are calling and saying, can we subscribe to this online school? We'll put 200 seats in our church. And all of a sudden, it's world-class, high-quality teaching and content in a local environment. You're starting to see that a lot. The other thing I'll just mention to try on precise, 70% of Nigerians, South Africans, and Kenyans pay for tutoring. That's either super expensive, most people can't afford it, or it's super cheap and it's not very good. So try that. Some of this is not going to be overly sophisticated. Let's just create tutoring marketplaces that are digitized. It levels the whole thing. It's affordable, same quality for everybody, et cetera, et cetera. So I give you a couple examples. The others, I'll just say, the whole arena of upskilling, or what used to be L&D or corporate training, is going to go away, and you're going to see continuous cultures of learning in companies, and that's going to be small, medium, and large. And that's going to get super interesting. I could tell you stories about people who are saying, I need an upskilling platform because this employee needs to skill up on AI or project management or data analysis. And it's going to become like in-house learning constantly. And there's a huge, huge business opportunity in that. And then the final one is my most exciting one, because it's such a white space, which is, what's the digital transformation of higher education going to look like on the continent? In Nigeria, as you know, there's one seat for every four. The continent is currently at 9% higher education participation versus 38% globally. 98% of the growth of higher education in the world is going to be in emerging markets over the next 10 years. What's that going to look like? And we don't know. But what we do know is we've invested in 2 what we call challenger universities, and they're radically changing the relevance and accessibility of high quality, employer connected, with internships embedded in the 3-year programs for a fraction of the cost. And when I first met E several years ago, we started talking about this, and I said, listen, there's this company I'm super, super excited about called Nexford University, which we're now invested in. There were 2 people in the Future Africa team already going. It's a $90 subscription a month. Go as fast as you want or as slow as you want. It'll change the price. But what's most important is that it's backed up by employers telling you what skills are needed. It's embedding the internships. Same with Kibo School, Nigerian former Google executive. It's a $6,000 3-year computer science degree, all online, taught by former Google executives, guaranteed to get you a job. And what's interesting is these models are playing with synchronous and asynchronous learning. So you used to think, oh, watching an asynchronous video can't be good learning. Well, it turns out it's great learning, because they then wrap around all the synchronous services, career coaching, group learning, et cetera, et cetera.
Sorry, let me use this. I heard some people paid $300,000 for their education in computer science, groaning. Sorry. We're going to transition to Q&A, right? Because, but I want to highlight something a little bit selfishly that she mentioned. There's a professor named Raj Chetty. He does socioeconomic studies, and he has this paper called Who Becomes an Inventor in America. And if you assume that becoming an inventor is like a proxy for, success and all of this, and they looked at 3rd grade math scores and 8th grade math scores specifically. They were like, the difference between those people who do well, everybody is doing really well at 3rd grade. By 8th grade, it's this question of nature versus nurture, right? He tried to answer that question point blank. And so the ability to invest that early, and really start to see the differences. And if we can look at that entire ecosystem around children, how they grow up, right? I think that would just really, really transform the continent in an important way. So I'm going to open it up for questions now. Please think about the questions that you have, but I'll have the panelists also, just before we finish, tell us one thing that you want everyone to leave with when we're done. Okay, so think about that as well. All right, so any questions? Yes, sir.
My name is Chinyere. One of the things that I want to get back to getting perspective on is this asset, the assets that are already how we find I think Korean example is a really good example. I think about, for Nigerians out there that are like Onisha and like the people apprenticeship model. Like if you go to these markets, you see people learning consistently and then learning to become effective founders, business owners, and they have like financing, they have all these things in place, the education in place. And like we have a lot of the answers. Like a lot of the answers to some of the biggest challenges we have. I think that there are two major challenges that I think that like I think we should be all college schools, right? So one, how do we uncover these challenges that exist in the void of like research and development, research, institutions that can go and find these, right? So like, how do we invest in companies that will do that, will invest in institutions that will do that, that happen? And the second thing that's interesting to me as well is that now how do we scale some of these, how do we scale some of that? And I think those two things sometimes become like unlocking those two things can really help us collateralize the assets that we have. Because there's a ton of them. There's for every country has like probably a ton of them that will like yield some of the $1 billion businesses.
That's brilliant. Thanks, Chika. One quick minute. I think what we're going to do is take maybe 4 or 5 questions. So keep your questions to like 30 seconds real quick, and then they'll take notes and then try to answer. And if you're directing a question at someone in particular, please do. Yeah. All right. Anybody else? Chinyere, you do. And then 30 seconds.
Framing that about how there's a big shift in DFI to sort of the big fund and capital. My question really is about, it seems like we've given up on actually broad-based investing in what would create sort of opportunities for mass without kind of get romanced by tech investing. I'm part of that. I think DFI as well. So what I'm wondering is, from your perspective, where do you see there being a limitation to the growth of the tech sector, where we don't have enough infrastructure or enough people to pay for the service that these tech companies are all that we're all trying to do? Where, I mean, because you have to do more, can you, does that calculate?
Okay. 3 more questions. Oh, really? Okay. Okay. Let's start with the 2 questions. Who's got answers? Please try to keep the responses to like 2 minutes. Yeah. So that's quick.
I can try. I mean, these are big questions, and I think both of them are very good. I think, yeah, there you go. That's what it is. So, what I understood in your question is sort of, if we're going to build all of this infrastructure and some of the digital stuff that he was talking about under I, we need to have consumers as well. And where's that money going to come from? Who's going to consume this, and so on? So you're saying, so the demand, is it really going to be there, and how do we make sure it's there? My thought on this is, I'm slightly different in my view. Well, let's say this. I think Future Africa has chosen to focus on time. But I think Africa's issues are bigger than just time. There are other areas as well. And there are other players that should be playing the role of filling those other areas. And you have to pick something. So I think I applaud that. But I think that doesn't mean that that's exhaustive. And so then therefore, whether it is, consumer goods companies, or whether it is, others that target the middle class, create jobs in other areas, in the old businesses and the not so exciting non-digital areas, investments in roads. I mean, he made fun of that, but the reality is we do need roads, and somebody needs to pay for that. And the DFIs can do that because they can take long-term. So I think that there is room for others to fill the gaps where capital is needed to create the consuming population, if you will, of data, to simplify there. So I think it's there. The simple answer is I think it'll take more than just the tech investors or those who are looking to the future. On the the second question on assets, I think that's a really powerful set of observations that you had, which is finding the assets is actually a big part of the question. And that is something that I will pose back to E, because when you think about supporting early stage companies and early stage founders, you're almost assuming that they have found these assets or they have found the opportunities, and you're just looking to support them. The reality is you might find those opportunities, and you might be looking for somebody to take that on as a challenge, or you might know what the problem is, but you don't know what the asset is. So I think that there is some forensic actually work that needs to happen. But the only reason I raised that example is that a lot of that sits in your own heads, in our heads. If you take a moment, just when you were talking about the governance system, I was thinking about in Ethiopia, in the Oromo culture, there's Gada, which is a different system of governance. Actually, you know what? There are many benefits to that, which are different from democracy in the way that we define it, would, I think, actually, if you scaled it up, could help in a lot of the issues that we have around the world. So I think it sits in many of our heads. I think it has to get cataloged, and I think Future Africa should set some capacity on the side to think about, for these core problems, what are the assets that Africa has.
Well, that's very fascinating. You mentioned the remote, really start to I think it's rules of us to have or okay. 3 quick questions about any human forward that. Anyone from the back? And any questions? Sorry. I think the women have all answers. Okay, so the man can go ahead and ask questions. Yes, sir.
All right. So we do have one specifically for asset-backed securities. So pretty much one of the best use cases for blockchain technology is security tokens, whereby there is a digital entry for that keeps an ownership record, that keeps a record of your ownership of an asset that is physical in the real world. And we think that for some of the types of opportunities that we want to onboard onto our platform, using blockchain to securitize pretty much real estate would be, for example, a good use case. Like other rare earth, so gold. So those are all things that we have in abundance in Africa, but there is not proper, I'd say there's not proper ledgers around, like who owns what. So there's not record. So you could use blockchain pretty much to build a market on top of it. So what that would look like is there's an asset, you log it onto the blockchain, and you pretty much trade on the platform the ownership of it, right? And whenever somebody wants to pretty much realize gains on it, that token could be pretty much deleted or burned, and then you go on and cash in the real asset. So security tokens, in short, would be an application when it comes to investing. So
thank you. That's very important. It's where property rights working on. Yeah. So moment of truth. You guys don't forget that I'm the one who first told you about the idea. So, billionaires in the room, what do you want us to have as a party for
Thanks. Thanks a lot for that. Well, as I said at the beginning, I worked in politics and we were always told that repetition is your friend. So I'm just going to repeat myself, which is for those of you who want to have a huge impact on the continent and also build billion-dollar businesses, please remember, you've never seen a convergence of the circumstances that we're seeing right now that's going to reinvent education into learning. And that's going to create a whole new way of thinking about how you invest in education, what you invest in.
good. So my parting word would be invest in Africa. We have major economic tailwinds that just make it the market of the present and the future. And if you think about the inception of, tech on, like in the US, 1990s, 2000s, the creation of that market and the companies that it's created, the wealth it enabled people to access. If you think about cryptocurrencies in 2010 and how the markets were created over 10, 12 years and where we are now, like Africa in those emerging markets and those emerging assets are on that upward trend. And that was just the perfect entry point across multiple asset classes, in my opinion, to just put your stick in the ground and start investing on there. So I'll just say invest and bet on Africa.
So, I mean, I would go back also to repeating. I think assets is what I would leave you with. I think because, one of the things after Black Panther, the movie came out, I since I was a boy, I've loved Marvel characters, and Black Panther, when it came out, one of the most fascinating conversations I had was actually about, if you remember that scene when you have all of the different tribes of Wakanda, and they were all dressed in different kinds of garb, across my African friends, talking about which culture inspired that particular one. So you probably didn't notice, but there was one, for example, that was wearing Ethiopian crosses. And the costume designers apparently spent time going throughout the continent, picking some of our cultures and taking elements of them and putting them in there. I'm sure you recognize some of the things in there from your own cultures. That is an example to me of our assets, a bit more of an intangible asset. I mean, I don't know that I necessarily thought that the crosses of my church belong in Hollywood. I didn't think about that. But apparently Hollywood thought that was a good thing. Fonio plays that same thing, at a time when the world needs something different. Maybe we've got it. The climate plots play the same. So what that should be is a source of confidence for all of you, whether you're an investor, an African who wants to actually be a part of this story, but investing, or you are somebody who wants to start something and you're not sure what to start. Think about that. The world values some things, or we have some things that perhaps the world and certainly ourselves should be valuing more than we've done so far. And they can be governance systems, they can be grains, they can be crosses from your church. There can be lots of different things, but that should be a source of confidence to engage in this dialogue. Not because Africa is rising, as I wrote as well. I will take on, I will take ownership of some of that, but because actually it is timeless and it is valuable. And some of those assets, look, we come from generations of proud people, and so they have gotten this far, and some of it is because of
Excellent. That was perfect. Thank you, Julia. And I wish we all.
Okay. No, go. Nice job. Nice job. Nice job. Nice job.
Okay, let's hear it for our panel one more time. Okay.
You need it.
We are going to forego our break so we can have an hour at the end for networking. So I'm going to bring up our final session, our fireside chat, a conversation in African prosperity. Is African prosperity, at the center of global prosperity? And I'll introduce our moderator, Ms. Vivian Chinyere. She is the head of business management and corporate responsibility at JP Morgan and Chase. Give it up for Vivian. I'll welcome E back with us, founder and general partner at Future Africa. And then lastly, we have Mr. Jude Moore, who is a senior policy fellow at the Center for Global Development, CGD. Let's welcome this last session.
Here you go. Okay, so let's set the stage a little bit, right? E set the stage for the African continent, the investment landscape, spent a bit of time talking about Future Africa and the work that's going on there, right? This last panel, amazing. Lots of really great insights about assets, taking the assets, lifting the assets up from the continent that we're aware of. Spent a lot of time talking about the changing landscape of learning on the continent, right? And then learning a little bit about Daba and the work that they're doing on investing. So now we want to have a chat. We got some things we got to talk about. There's work to be done. And these groups have set the stage. So we really want to get into it. And the topic is African prosperity at the center of global prosperity? So by show of hands, what does the group think? Is African prosperity at the center of global prosperity? What do we think? I am not convinced. Are you convinced by this group? I know. Okay, so hopefully by the end of this talk, there'll be a lot more enthusiasm about the answer to that question, because it should fundamentally be yes, without a shadow of a doubt. The trajectory of the world is dependent and critical on what the landscape of the African continent looks like. So let's talk about it. So we've heard from myself, he introduced himself, but Jude, do you want to introduce yourself very quickly?
Sure.
And then we'll get into it.
So my name is Jude Moore. I am a senior policy fellow, like he said when he introduced me, at the Center for Global Development. There, I focus mainly on how to build infrastructure in Africa, but big infrastructure, regional infrastructure, roads, power, and trying to solve this difficult question of how to attract private capital into public infrastructure in Africa. But it's almost impossible to talk about infrastructure in Africa without talking about the role of China, especially over the last 20 years. So as part of my work, I also riff on Africa's response to the presence of external actors. So not just the Chinese, but the Turkish, who've gone from 12 embassies to 42 over the last 2 decades, the Gulf states in East Africa, and of course, our good friends, the Americans and the Europeans. So.
Yes.
You forgot to mention you are the minister of.
Oh yeah, but I
former minister of Liberia.
Of Public Works in Liberia. Was in charge of, before I became Minister of Works, there was something called the President's Delivery Unit, sort of oversaw the country's build back after the war, and then I became Minister of Works. Yeah.
Excellent. So let's talk a little bit about the definition of prosperity. I think that the last panel described this a little bit, but want to hear from each of you. Let's level set, right? So before we start going deep on some of these questions, from the perspective of, we're talking a lot about the younger generation on the continent. So from the perspective of these young people that are like us, right, and younger, tell us your definition of African prosperity in the context of global prosperity.
Sure. It's really funny. The first question you asked, is African prosperity at the center of global prosperity? And my answer is not yet.
Okay.
So, and it really speaks to this definition of African prosperity, which for me is, when we think about our societies as they were originally designed, right? What you realize is a lot of the way we live and work today is not necessarily aligned with kind of how our societies were originally designed. So if you think about, for example, a very common example is, historically, actually, we're not really a country of empires. The construct of centralized governance in a real sense is actually a Western construct. You do have fiefdoms, you do have kingdoms, you do have kings who pay tribute to other kings, but at the core of our communities is really the sense of extremely decentralized, right? Almost self-organizing communities, where somebody could very freely wake up in the morning and decide, I'm no longer feeling very good in this kingdom. I and my family are going to move and go found another kingdom two doors down. You know what I mean? And we'll clear land and start a farming settlement. And they were connected primarily by trade, which is why you would have one village here, next village next door, and all of that. And there wasn't very much to distinguish between one village and another beyond this concept of, trade. Why do I use that as an anchor, right, for describing African prosperity? It's because I think the way the world defines prosperity typically is not only from an individualistic lens, but actually from a lens that actually disregards some of the foundational principles of things like social infrastructure, the importance of free trade, libertarian, or what people would call libertarian idealism, and republicanism, and so on and so forth. Our prosperity is really anchored by our community's prosperity, not by the way we thrive as individuals, or the ability for us to create systems that allow sole individuals to thrive. And what that means in terms of how what African prosperity has to contribute to global prosperity is that we will solve problems very differently from the way other people solve problems. So I'll go back to some of the thought process behind some of our most successful companies. For example, with talent, right? The rest of the world had solved, quote unquote, talent shortage problem in computer science by essentially telling people, you who needs a job should find a way to get $25,000 and show up in New York at GA to get an education in computer science. And the people who supposedly have a job for you have no part in it. It's your job to figure out how you get that money, you who doesn't have a job, right? And show up in New York and spend all your time, forgo income, just so you can get a better career in software engineering. And it took Andela coming to the scene and saying, this makes no sense. If you have no money and you claim you can give me a skill that can make me money, you take the risk, not me. And now that has been, in typical American fashion, appropriated into what they call ISAs, which are now $1 billion industry. For those of you who don't know what ISAs are, it's basically like it's basically like an advanced version of student loans, where the school basically takes the risk rather than the student themselves. So if you were going to do student loans the African way, Howard University should be taking the bill. Harvard University should be taking the bill, right? And so when they make you study something that doesn't make a lot of sense, they should be the ones paying, not you. That's how African prosperity works in the context. But here we are in America, where the government says, well, you are the one who decided to study, I don't know, whatever. So your job to find a job. Mm-hmm. But that's not how African societies work, right? There is that element of it. And there are many other examples. If you think about Flutterwave, same thing, at the end of the day, you're thinking, how do you empower communities of businesses by enabling everybody work together? Not by getting Visa the ability to dominate the market, but by saying, well, guess what? If you want to make payments with Visa, you can make payments to all the merchants. If you like MasterCard, you can make payments to all the, if it's PayPal you love, if it's M-Pesa, if it's, that is not an American concept. The American concept is duel to the death, right? So Visa must win over MasterCard, but that's not an African way of doing business. So when you look at the kind of investments that we make because of our belief in African prosperity as a concept, you find that we're able to make better investments primarily because we think about the way we think as Africans about investing and the kind of assets we treasure and believe in. And that makes all the difference when it comes to delivering the returns.
Thank you. Jude.
Well, I guess mine is slightly simpler. One is that I have this new argument, this new theory that I'm making now.
We're just defining prosperity right now.
That Africa is at the center of global prosperity. That in fact, for a long time, when we thought about the poverty in Africa, it was seen as something localized. It was an African problem. But I hope over the course of the discussion to be able to convince you that actually it's time now to begin to think of African prosperity as one that would drive global prosperity. We have an example of that. For the last 20 years, it has been the voracious consumption, especially of raw materials, of Chinese industrialization that has driven global prosperity. And that is beginning to wind down. There are 2 places in the world now where the built environment is so underdeveloped that they have the capacity to drive the same kinds of growth that we saw happen with China as India and in Africa. But I will tell you the reason why I believe it's Africa that's going to drive that. So I believe that Africa is the center of global prosperity going forward. But you can disagree if you want to. The second thing is how do I define prosperity? Mine again is it's also that you know, I have this thing called the Africa Project, and the Africa Project for me is an aggregate of all the things that we do to see Africa thrive. So when I think about prosperity, what does it mean for prosperity in Africa? Is to see the African person first at the individual level, to see the African person thrive in his own environment. Right, every day you open the news, you see Africans dying in the Sahara, dying in the Mediterranean. Why? They're drawn towards something better, right? They're drawn away from something bad. My vision of African prosperity is that whether one is in the arts, in tech, whatever it is you do, you can do it in Africa and thrive and do it really well. That's for me at the individual level, prosperity. At the country level, there's this thing that 30% of the continent's population lives in a landlocked country, but your neighbor is not Germany, you're not Switzerland, right? And so because of that, there's significant poverty. And a lot of these small units, we have the same population close to India, close to China, but India and China are a single jurisdiction. Ours is 55. And so the viability of some of the African states as individuals is very, very difficult. And so in my view, then prosperity at the state level is an Africa that is progressively acting in concert, right? AFC, FTA works. I can swipe mine. If I'm in Nigeria, I can use my MTN phone and call Liberia, and it wouldn't charge me more because I'm in Nigeria. There will be this, so prosperity will be shared. That Rwanda is not going to be poor because Rwanda doesn't have access to the sea, right? And so when I think about prosperity on an individual level, is that the average African thrives in his environment and doesn't have to leave his homeland to be able to find success, but that even the smallest units of states are able to thrive also within the collective of what we have as the FCFTA.
Excellent. And so I think, between the two, they're coming from two different perspectives, but core and fundamentally still aligning on this idea of African prosperity being at the center of global prosperity. One from the perspective of being a researcher, but also building actively on the continent. The other building his own startups and then investing in other startups. So I think that hopefully through this conversation, you'll also see that coming from different perspectives, regardless of where we're all coming from, we should be aligned in our shared vision about the direction of the African continent being at the center. So let's go a little bit deeper, right? So there are a couple of levers. We were prepping and having a conversation about these different levers. Again, they might not agree on everything, so this is going to get interesting. But there's a couple of levers that when we talk about African prosperity, what does that actually mean? What are we saying needs to be changed in order for us to make these advancements? So we talked about three. One is around capital. The second is around engaging the diaspora. And the third is about the changing macroeconomic trends. So we're going to kind of go piece by piece. The first one is really around capital. So the first question is, the cost of capital is a barrier. So you have your time framework. You have the research that you're doing and what you want to do in infrastructure Jude. So centered around that, let's talk about the cost of capital, because there's a trend also in talking about capital, investing in startups and all of that, but is it equitable across all of the different environments that we're talking about? So let's talk about the cost of capital and the barriers for some and not others.
Yeah, I think you should go. Okay.
So I think he should answer this question because he's building stuff. So I would just give a theoretical response because I'm more from the public side and not from the private side. So well, I guess the way I see it is this. There was, at least for the last decade, because of quantitative easing, the cost of capital in the US was really cheap. And we saw all kinds of nonsense. Shit coins, but I think that proves my point that when the cost of capital is cheap, when the cost to borrow is cheap, then the cost of failure is low. When the cost of failure is low, people take risks, right? But if the cost of capital is high, it raises the cost of failure, meaning that for me to invest in anything, I have to do due diligence out of that project and try to hedge, because now the cost of capital is so high, failure costs. And so it is my view that if we want to build the Africa that is going to be at the center of global prosperity, then something has to happen about the cost of capital, right? He was able to raise his capital on the continent, at 60% of his capital on the continent. But I still think we need more money, right? I was looking at the numbers yesterday. The total combined assets of all the sovereign wealth funds in Africa is around $300 billion. But this year alone, that's how much Meta lost in valuation. That's how much Tesla lost. So you're taking all your sovereign wealth funds in Africa, and the total they have is what Meta lost. And Meta is still a good company, right? So I think we need way more capital. Yes, let's get it from the continent. But, you know, if you have US citizenship and you're from Liberia, you'd theoretically should have access to cheaper capital here than you should have than the people in Liberia. And maybe it's not all the big checks. And that's why I love Future Africa, because you don't have to be like a rich person to invest in it. I think we need to leverage the one leg here, one leg there, and be able to attract capital, because I believe that if we want to build enterprises in Africa, especially absorbing the kinds of losses that will come from doing businesses, then capital has to be cheap. But that's all theoretical. I think we should ask the guy who does it. Like,
Let's do that.
Well, you know, I think that the theory is generally right in practice. But I think there's always a layer when you're in practice, which is what is the actual capital stack. And so when I, you know, obviously when I started on this journey, you know, venture capital is some of the most expensive capital you can raise, right? Because it's literally, one of my investors says it's a credit card on your credibility with a 20% interest, with an 80% interest rate. So essentially you that's the model, right? So the model is, I take your money, and first of all, I have to give you back your money. So you have to trust I will. Then I only get 20% and you get 80 of the profits. And that's the cost of the capital that we all celebrate, 5.4 billion, of which 80% of that money, which has now come in, has to go right out. And so sometimes I wonder why we should be celebrating in the first place, but that's a different conversation. Try not to shake too many tables. But the second part of the conversation is, what is the capital on the continent doing? And this is where I find that a lot of the times we cry about how much capital we need without having a conversation, again, back to the point Emilite was making, about how much capital we already have. I'll give you a practical example. When I first, you know, I kind of saw a little bit of the signs of Black Lives Matter in 2019. So booked it on a plane. I went back to Nigeria in 2020 before the pandemic became a thing. And that was one of the best decisions I made, even though it seemed at the time like it was a very foolish decision, because the question was, you want to start a venture fund in Africa, where are you going to get a capital? And the most interesting thing about making that decision was that I had thought at the time when I was going back in, that I was literally walking away from capital. What I didn't understand was I was walking into capital. But when I started to understand from the patterns of who we're raising money from and who was really excited about the problems we were excited about, where the capital was coming from, I didn't realize, I was like, okay, this sounds great, but why has no one done it before? I'm not that smart, which is a question I ask myself over and over and over again when it comes to Africa. It's like, why has no one done this? Like, so easy, you know? And then all of a sudden I realized, oh, okay, you know, I'm making a lot of progress with all these individual investors. So I go to the bank. That's the next logical step, right? Go to the bank and get to more people. That's what we did at Florida Wave, right? Because everybody keeps their money in the bank. So if you want to get people's money, the famous saying says you rob the bank, right? So you go to the bank CEO and be like, okay, how can I rob you? Obviously, this is like philosophical, but basically what we realize is the banks in Nigeria were legally barred from making investments in venture capital. Legally, in 2020. So I said, okay, you know, this is bad enough. How do we change it? And they say, well, you know, you actually have to go to the National Assembly and get them to change the law. And, you know, one of my advisors says, well, luckily for you, they're in the middle of passing a new Birth Year 2020 Act. Maybe you can get there in time to change the law before they pass it, because they're not going to review that act for another 5-7 years, maybe at the next administration. So you know what I do in the middle of the pandemic? For the first time in my life, I use my own money to book a private jet, and I fly to Abuja in the middle of the pandemic, which somehow miraculously the legislature is still running. And I literally live in Abuja until I managed to change the law. But how many people are gonna?
Yeah.
But the question is, how many people are doing that kind of work on the continent? In the sense that I'm not saying I'm not doing anything special, but many times we're just going to go on a panel and complain about that. But that is an active barrier to accessing capital. So while we complain about the cost of capital and we wait for all the foreign aid organizations come save us, there is capital on the continent. 33%, the average African is investing 33% of their money in alternative investments. And that's against here where it's barely 4%, 5% has been invested. They're investing in all sorts of Ponzi schemes because the laws don't let them invest in actual regulated assets. And the rules don't make sense. Or they're keeping their money in the bank and giving it to the government at 20%, and the government just prints more money and it creates no value for them. So these are the structural issues. Before we start talking about, you know, we don't have enough capital, how are we organizing the capital we currently have? When you read the history of high finance in US and Europe, and it's something I've been studying a lot over, you know, post-pandemic, the level of deliberateness, right, that the Kuhns and Lebs, the Pierpont Morgan, the Rothschilds brought to designing a financial system that the world relies on today, right? The level of care it took. They had no capital. It started out as merchant banks. They moved on to selling bonds. They moved on to really crude stock exchanges and creating bank trusts. That's how they built their financial system. But in Africa, we're not willing to do the hard work of building a capital stack. We just expect somebody to hand it to us.
Tell us more about the capital stack. Tell us a little bit more. How do you describe that? And then Jude, I want you to respond to if you agree with what he's describing as well.
Well, I'll use a practical example of a capital stack, right? Government needs to build roads. Practical problem, right? Let me tell you how government builds roads today. Government, first of all, is going to borrow money, right? They're going to borrow money to fund the budget, which only 20% goes to roads, by the way, right? i.e., they probably don't have enough in the budget to build any road, not to talk of the most important roads, right? Then, out of that 20%, the road contractor they're going to contract it to, 40% is gravy. So do the math. How much is actually going to roads? Then, delays, labor strikes, blah, blah, blah. By the time all is said and done, we've given government $100 and only $2 actually goes in the ground. That is today's finance. That's our high finance for building infrastructure. We're never going to be able to build infrastructure if that's how we build infrastructure. On the other hand, and this was a topic that, in the US, the equivalent of roads, and we're very foresightful in using railroads, particularly, right? Railroads that can move goods and services and people, and it's all private capital. Every single railroad in this country was built with bonds. Not a single dollar of government money went into railroads in this country. Railroads were the equivalent of blue chip stock of the 18th century and 19th century. So that is how the greatest greatest economies in the world have built it. Why does Africa think it's going to get away with doing it differently?
Do you want to respond to that? And then can you also,
Yeah.
if you could, also weave in a little bit about the history of Liberia, given your
Well,
work with the public
definitely.
works? Yeah.
Sure. I think, he makes a lot of arguments here. I'm from the public side, so
Mhm.
none of this stuff happens without the government. The government can be an impediment, or the government can be an enabler for the private sector to thrive. For the law to be changed, the legislature had to pass a law. He had to engage the government. The government does have a role here. The second thing is, especially when it comes to infrastructure, I feel like one of the reasons why, as much as it's possible, I think the question I struggle with in my day-to-day work is how to attract private capital into public infrastructure. One, because the life cycle of public infrastructure is really, really long. A road is supposed to last anywhere from 15 to 20 years. And so if you're going to attract private money into that, one of the first things you need to guarantee is, at the very least, the government has to be able to make a credible commitment that lasts 20 years, right? To be able to attract private capital into that. And so governance is a big thing. The quality of the regulatory environment for the private sector to be able to thrive. That's very, very important, and that's government. And when I think about public infrastructure, those things are public goods. There is no high-speed rail in the world that is profitable. They're all run at a loss, but it's a public good, and governments invest in that. I lived at 123rd in Amsterdam for a while after college in New York. Maybe it's changed now. We didn't pay for water then. That was a public good that the city invested in. Public infrastructure is a public good, and the principle around which the public sector works and the private sector works different. Private sector is around private goods, is profits, and the public sector is meant to be. So I think with McKinsey did this study in 2019. There were investors with 11 trillion in assets under management who claimed to have appetite for African risk. I don't think that's true. We haven't seen that, but that's how much money is in the private sector, right? And so if we can get the private sector to work with the government to build public infrastructure, we should. The reason why I still want the public sector to be able to do that is because we don't want them to say, I'm going to turn off Starlink in the middle of a war because, I built it. We want public infrastructure that is owned by the public and not some unaccountable private actor, because the private actor is acting to build value for his shareholders. So I think when it comes to public infrastructure, there is a middle ground in which we can get private money into that. But I'm a little hesitant about this because my best example is the third bridge, the HKB bridge in Abidjan. One day, in 2019, I was in Abidjan, and luckily I was in a room at Sofitel that gave me an vantage point to see both the second bridge and the third one. The second bridge is free. The third bridge, the newest one, is 500 francs. At the time, it was like $1.98 for each trip. And around rush hour after work, the first bridge, it was bumper to bumper. The toll bridge, you could put a mat down and sleep, Well, and this is Abidjan. This is in Freetown. This is in Monrovia. Abidjan is, in terms of ability to pay, is higher in Abidjan than in Monrovia or in Conakry or Freetown. And here we were. And so normally for private companies to build toll roads, the government has to pay for the shortfall. Like we have to make a guarantee that if you don't make this amount this year, we pay for that. So I honestly believe that there are times, maybe get Dangote to build a road, you can talk about that, when we can get the private sector to do some of that. But I think the public sector still has a very, very big role to play when it comes to building public infrastructure, because usually, especially social infrastructure, is not profitable.
He wants to respond.
Yeah, just one thing. The trouble is the boogeyman is usually public sector must be involved. You need government. There's nobody who contests that. You cannot do these things without government. The question is, what role should they play? If I want to invest in building roads, for example, or internet access or whatever, is the best way to do that investing in government bonds, where 2 cents out of every dollar actually goes to building the road? Because I don't think, I think I'm funding Swiss bank accounts, actually, not funding roads when I do that, right? Or like in Nigeria, what we started to do was we said, hey, you say taxes should go build the roads. Well, you know what? Dear company, tell us which road you will build, right? We will determine the standards. You build the road and we give you the tax credit. That way, 100% of the tax dollars will go and build roads, right? And that way, everybody's happy. Nobody, you know, the only people who can put money in Swiss bank accounts there are the people who actually build the roads. And maybe they want to build another road with that money. But it is inefficient. It is inefficient to make government more than a regulator of what is being done. Because they've never, and they don't seem ready to, and they will never be able to prove they have the capacity to actually execute. So why don't we just stop doing that, right? Why don't we just tell the Ministry of Works to shut itself down across all the African countries?
Those are fighting words.
Yeah, you're doing way better as a policy advisor who keeps everybody aligned.
So let's bring it now to the group, right? So we talked about, we've got some folks who might be excited about investing or looking at investing. And then we have some founders in the room a little bit. So maybe to close this and then to pivot a little bit to being in the diaspora, should we be rethinking the way that we think about capital as diasporans? Are there opportunities that we maybe haven't explored? Again, from the perspective of a founder or from the perspective of somebody who might be interested in investing, should we be rethinking it? Could we be borrowing money?
Yeah,
Could we be borrowing debt?
yeah, I mean,
Are there things that we should be looking at? So again, think about who's in the room here.
Yeah.
Their vantage
Yeah, I'm sorry, it went kind of super high level with the infrastructure conversation. No, but it's good because it's a macro way of thinking about where debt, how capital can be aggregated or mobilized, as we say in our industry. Because I think the ideas that we currently have about how to mobilize capital are tired ideas. I'll give you a practical example. Angel investing in Nigeria today is still not tax-free, which makes no sense. So if I angel invest in a company which will most likely fail, I cannot claim it on my taxes. That makes no sense. Why should government take taxpayers' money and invest it in a venture which has an 80% failure rate by design? Right? When there are people who are willing to put their money at risk with people they know, and all they're saying is, can I take it off my taxes, please? If it succeeds, it's a benefit to everybody. And if it fails, maybe the learning is actually, you know, so beneficial to somebody. There's so many different new ideas about how these things need to work. And I think we need to start redefining it. So back to the room, thinking about diaspora, the reality is we don't actually need diaspora bringing dollars back. And it's a very controversial statement, but it's one I stand by. I would rather, I'll give you a practical example, right? I don't know, a lot of the 40 billion that is claimed to come back in remittances, right, doesn't go towards investment. It goes towards paying hospital bills, paying things.
Yeah.
Meanwhile, right, you know, a company like Microsoft, right, which has a bunch of Nigerians and Kenyans and all that banded together, and they got Microsoft to mandate $100 million investment in Africa. If you ask me what the ripple effect of each one is just an advanced aid program. It's no different than what the West does. It just happens to be people of our color, skin color, and it's more direct. Yeah, it's just an advanced aid program. I would rather that you leverage your influence, your reach, your actual vote in this country and said, well, guess what? Why does America not have a tax treaty with Nigeria? It has all these tax treaties with all these random countries and they don't need it, right? So why does America not have a tax treaty with Nigeria? Why can't why is the DFC, right, not able to invest more in African countries? I'm a Nigerian voter, right? And I want to see how much the DFC is giving my country, right? And if you're not giving my country enough and the other party is, well, guess what? I'm gonna move my vote over to the Republicans because they're giving more to Nigeria. They're investing more in Nigeria. They're facilitating more investment in Nigeria. Let that be the metric by which we measure who's doing what for us, right? I want you to call your CEO and say, I'm very talented. I've spent a lot of time in this company, and I want to understand why you don't have an Africa strategy. Because guess what? I'm going to leave you in 2 years if you don't have one and go to a company that does. I'm not going to stay here the rest of my life. This is what the other countries do. This is what the Israelis do. This is what the Chinese do, right? I was talking to my brother the other day. He said, some of them are like a chunk of the people he works with are in Hong Kong. And I'm thinking to myself, why does JP Morgan need folks in Hong Kong? I was figuring it out. But I'm sure it's because someone's making a case. I find those forms of activism, if you want to call it that, far more useful than sending, $200 to your mother. It's great, and you should do that, but it's not investment, right? That is not going to move the needle. What's going to move the needle is when your brothers and sisters have jobs at home, right? When there is, and if they say, look, we can't do it because there's no talent, that's a great, great, great one. But guess what? In Nigeria, we're exporting our talent at our own cost. We, the government of Nigeria, spends $1 billion of scarce foreign exchange, essentially giving our people a ticket to the US so they never come back. And we say we have problems. So there's so much that we're doing, and this is why it's important to think about the capital stack holistically. There is so much that we do in terms of the capital stack that makes no sense. And it's because we're not thinking strategically about where our money, our time, which is more important than capital, if you ask me, is being spent.
I think we should use it and go into the diaspora, I think, because I think I definitely agree with E that, we need more than simply physical, like money, fiat. I think we should definitely bring more money to Africa, though. I'm 100%. It doesn't, like I said, it doesn't have to be $1 million. If we can get as much money into Africa as possible, we should. And if the diaspora is in a position to do that, I think they should. That on that. The second thing is, capital is not just fiat. There's also, like he said, the network. There are the skills. And that's why I think our definition of what constitutes the African diaspora ought to be as expansive as possible, right? I think people in the Caribbean, they're Africans too, all right? And when we think about what it means by the African diaspora, those people ought to be there. Afro-Brazilians, definitely in the diaspora, because all of these people have skills, have networks that we need to be able to build a continent. If our definition of the diaspora is me and my kids, then it's way too narrow for the size of what we're trying to build. Sometimes because I do infrastructure, when I talk to audiences, I try to paint a picture of how large that continent actually is. And one of the examples that I like to use is that the distance from Cape Town to Cairo is still 11 kilometers longer than the distance from Beijing to Berlin. This is a massive continent. And we're going to talk about that in the final phase of this in terms of where we're going as a continent. For us to be able to build, and let me use some infrastructure examples because it helps make the point. Between 1901 and the year 2000, the US used about 4 billion tons of cement. So everything you see, Sears Tower, Hoover Dam, all of the cement, the big buildings you see, that's how much material, cement and steel the US used over 100 years, over that century. So that's the built environment. Over 3 years, from I think it was 2000 to 2010 to 2013, the Chinese used 1.5 billion more than the US used over an entire century. The Chinese used in a 3-year period in building the built environment that you see in China today. I say this to paint the scale of what needs to be built in Africa. And the cost of building that is not going to rest on us who are citizens of African countries alone. We have to dig deep into the diaspora to bring back everything they can. And so there is nothing wrong. India doesn't suffer because the guy who runs Microsoft is not in India. India benefits from that. A significant part of the tech industry in India benefited from Indian expats in Silicon Valley. We ought to be doing the exact same thing for Africa as we build tech. And so when we think of a capital stock, we should definitely bring money. Unlike E, I want more money. But we should definitely also think about bringing our networks, and that network has to be as expansive as possible. Now, I know some people get really, really, who constitute diaspora. Some people get really upset about making it too big. That's wonderful. That's wonderful too. I believe that, and this is the piece I want to add, and then I'll stop here, is that we're not a monolithic group, nor should we be. The way we see problems and the way we see solutions are always going to differ. That doesn't make me less authentic as an African. Don't call me a sellout simply because I don't see the world the way you do. Let's all fix it. Now, if we get to a place where we're actively undermining each other, we're not building Africa. So I think when we talk about the diaspora, we definitely should be bringing money from Barbados into Nigerian startups, bringing money from, just bring all the money out of the Caribbean into the
money. Let's just bring all the money.
Sorry, just to double down on this point, the truth of the matter is, even when you think about all those countries, right, what you need, and I keep saying this, Africa at the end of the day is a bellwether for how the race is treated primarily, right? So at the end of the day, it doesn't matter. Like if you're Barbadian or you're Jamaican, the first assumption is, oh, maybe you're from Africa, first of all, before maybe you say something and people are now willing to kind of start getting into the specifics. Same with African Americans, by the way, everything, right? The first assumption when they see you is, oh, maybe you are African. And then afterwards, whatever. And the challenge there is that, especially because of the scale of the problem that was mentioned, you need capital from all over the world to make that work. And the capital many times is not your capital. The capital that built the US is European capital, mobilized by Protestants, right? And then there was, Jewish money found its way there, and money from Russia found its way there, but it wasn't one person's capital. It was a joint effort from everybody, people rallying each other around on the basis of this American dream. And I think that one of the tricks we're missing is finding international financial centers that are actually inclusive of us. And I say this because while banking while Black is not a big problem, it is actually a challenge when it comes to mobilizing capital flows into Africa. I say this as somebody who's worked in the infrastructure. I've worked in the infrastructure. The reaction you get from, pardon, my pointing this out, but like, high finance, JP Morgan, whatever, when you say,
They don't represent them.
I'm an African business that wants to do business globally, and it's the standard response. The standard response is no. Right? You're not supposed to be here. Go look for your peers somewhere else. And in many ways, I always joke about financial inclusion. I say to them, the challenge with financial inclusion is it's not starting from the top. That's why it's going to be very hard to get there. Because if you don't have African businesses able to integrate into global finance, right, for any reason, you're never going to get the bottom of the pyramid included. That's the hypocrisy of the whole thing, which is they're trying to sell us MasterCard, Visas, and bank accounts, and they're claiming they want to include us. But the general point is we need to build a network of international finance centers where this money can flow through.
Fair.
And the first time I heard Bermuda was Black-led, I was very shocked because I honestly thought it was was a European country, right? And I was like, oh, it's Black people. Bahamas, first time I understood, oh, they have a Black prime minister. I'm like, how? You know what I mean? Many people, I don't even think many people around the world actually know this, that all these countries that are kind of the havens of high finance, where they hide their money, quote unquote, are Black. Meanwhile, we're sending our money to Switzerland. And they very promptly cut us off as soon as they can. So there has to be a rethinking of the entire stack, right? Where we're saying, maybe again, I acknowledge that it's not all the money that we can do that, but why are we sending our money to Switzerland and Luxembourg and Dubai when there's Barbados and there's Antigua and there's Grenada, right? If we're going to be doing high finance, then we should be doing it. And you know, the shocking thing is all these countries never really think about including us. So people put their money in Switzerland. Switzerland doesn't have a tax treaty with Nigeria. So quite frankly, you're supposed to be paying taxes on that money. Nigeria doesn't take them, but one day they will. But obviously, you know, you're hiding away your money in a jurisdiction where the money is not being used for African development when we need capital. So there's all these internal contradictions, in my opinion, in the way that we work towards our development as Africans. We need money, but our money sits somewhere else.
True. So let's double click a little bit because I want to get us all into drinks and snacks and all the fun things. So two things. One, we're talking a bit about capital being a lever, the diaspora and your skill sets being a lever. But let's talk a little bit about the controversial topic of China investing on the continent. So for one, is all money coming into the continent equal? Second thing, what about the investment that's being made on the continent? So if the founders are not African and they're the ones getting the capital, is that equitable? So are we in alignment and agreement on those 2 points? So the money coming in and who it's coming from, and who is the money going to on the continent? So thoughts on that, and then we'll close with the last piece on the changing economic trends in population.
I mean, I'll just say I have very strong opinions on it. And the first thing is,
Do it.
you know, what is China looking for when it invests in Africa? It's looking for natural resources. And the sooner we understand that, the better. They're not looking for a return on investment, right? They're building something, a political gimmick for probably a dictator or somebody who needs to show something to their people to deceive them so that they can sign an agreement that basically allows them to export our natural resources rather than develop them in our country. And they've gotten away with that again and again and again. So I'm not that sympathetic to China, right? And furthermore, again, it's not like the West is better, because when they come with their own money and invest it in their own people, right? And that's where we Africans, you know, and friends of Africa have to be much smarter, right? Where we have to understand what exactly are they looking for. Money is a commodity, right? They all print it, right? Because these are huge government-to-government transactions. They're all printing the money. So what are they printing the money for? They're printing the money in the case of China so they can have a claim on your natural resources. They're giving you something valueless for something that actually creates value for them, because then they go add tons of value to that and export globally, and you can't get any piece of that. So you should ask yourself, you know, is it even worth selling? And the same thing, you know, when America or anybody else invests, they're investing because of access to market. No one expects us to pay back all that debt. That's the truth. If they did, they would tell us to go get it from commercial markets, because that's when you get caught off. And we always pay. Africa has never defaulted on a commercial bond. Never. Argentina has, we haven't.
Jude, thoughts.
Sure. So I'm sure you know that I have a different view on some of these things, right? And the first one is that I'm actually sympathetic to the Chinese, and I'll tell you why. That the half century of African history has just simply been the presence of external actors on the continent. The Europeans came. You know, I remember coming here to school and introducing myself as William Jude Moore. And people would be like, I didn't be from Africa, you need to be William Moore. Right? But I'm from Liberia. And you see the flag. It's just one star. I mean, everything there was. I'm actually from Maryland County in Liberia.
The irony.
Maryland County was founded by free slaves from Maryland here in the US. And it joined Liberia. It was called Maryland in Africa. It was a country by itself, and it joined Liberia in 1857. So I like to joke that I'm from Maryland in Liberia. I live in Maryland in the US. Right. And I highlight this to say, you know, have Africans with I remember growing up, there was a guy in the Democratic Republic of Congo. I think he was one of the rebel leaders there. His name was Pierre Wamba Diawamba. Man, I love that guy's name. I did, and I wish I had a really authentic, you know, African name like that instead of William Moore. And so that's why I just started calling myself W. Jude Moore, like, you know, Africanize it a bit. But I'm saying all of this to say that the West has been present in Africa for a very long time. And most of that relationship has been extractive. It hasn't simply been taking our natural resources, actually taking our people. The creation of capital stock in the West was built on our backs. Now, what did the situation look like before our good friends, the Chinese, came? It meant that a company like Glencore would sign an agreement in DRC. It would sign what is called a concession agreement or mineral development agreement. It means that and normally what would happen, they would create a local, let's use ArcelorMittal because I'm very familiar with them. Mittal Steel is an Indian company, and I bought an Australian company in Arcelor, and it became ArcelorMittal. So ArcelorMittal shows up in Liberia and signs an agreement with us for half of the mountain that is between Liberia and Guinea to extract that. Now, that's the normal way of doing it, the private sector way. They will go to the market to raise money, extract that, and then they'll pay us royalties, and then we have a small equity in the agreement. That's what it was before, and almost all of that money of African resources ended up in Swiss banks. And then the Chinese came. When the Chinese came, they said, "Look, we'll try a different model. What about you take out a loan against the earnings on that to build a road, to build a power plant?" And for the first time in many countries, people saw a direct connection between the extraction of the resource and the availability of resources, of infrastructure. We have over 1,000 kilometers of road that would not exist on the continent if the Chinese hadn't come. More than 10,000 kilometers of rail, more than 80 major power plant projects. Now, are the Chinese perfect? Absolutely not. Their insistence on secrecy about these is terrible, because if we're taking out loans that we intend to pay back, we need to know the terms of those agreements. But the Chinese specifically forbade their African partners to review the terms of that. That has to change. But, and I'm going to come back and close on this China piece here with this. For the last decade, the US, the Europeans, been accusing the Chinese of debt trap diplomacy, that the Chinese are intentionally ensnaring their African partners into these agreements so that if they can't pay, they will come back and then they will take over flagship infrastructure. So the Chinese were doing lending the terrible way. Well, since 2014, China has cut back significantly on its lending for infrastructure. We're waiting now to see the Americans and the Europeans stand up and do it the right way. They're not going to do that. And so my thing is, when you talk to foreign policy people here in the United States, what they want is that the US will be Africa's partner of choice. And what I say is that Africa doesn't want a partner of choice. We want a choice of partners. So that's my view on the Chinese thing. I should just say a little bit about when the money comes into a white founder in Kenya, right?
Very specific.
Yeah, I mean, this was a big thing. At one point, there were these pictures, right? Like, oh, look, all the money coming to firms are coming to. Here's again, my take on this is a bit controversial again. I don't care. Are they building a company that is providing value to the Kenyan customer? Yes. Are the people working in that company Kenyans? Yes. Do Kenyans have equity if there's ever an exit or is sold or an IPO? Will Kenyans get something? Kenyans get wealthy? Yes. What other person in there is, if that is not the case, then it should be. But if white people showing up in Africa are raising money and building companies that are creating value in Africa, I'm so happy. Come more. Let's do more of that. I believe that as much as is possible, we should invest in Black founders. We should find as much resources as possible for Black founders, but we shouldn't. There are Black people working for JP Morgan. I'm not going to point out people here.
Keep talking about JP Morgan.
There are Black people working for firms on Wall Street and are creating value for them. Nobody's complaining that, you know, they're creating significant wealth for them. So if a white person comes to Africa and creates a company that creates value for them there, I'm all for it. Now, again, I should step back and say, initially I said, the way we see the problem, the way we see solutions are going to differ.
Yeah.
I'm not an Uncle Tom because I see it this way. My view is just as valid as yours. I want as many companies as possible to be built in Africa. And if possible, let them be built by Africans. But if it is not possible, let them be built by whoever. If they're creating value in Africa, I'm all for it.
So do you
Can I just add one more paradigm?
And then we'll go to the
Yeah.
changing economic.
So
trends.
I agree, you know, I love the statement you made about Africa doesn't want a partner of choice. It wants a choice of partners. But I think there's a third leg, which is Africa has to choose itself. And I think that's the most important thing, right? For me, I don't care, like China, America, wherever, we lead with courage and they follow us. That's what over $1 billion, $4 billion of capital has done, right? First money in for Florida Wave came from Black people. Literally the whole capital, the whole $500,000 that started Florida Wave, which is the most valuable company on the continent. There is not a single American investor who can say, I seed funded this, I did this. All that, the entire cap table was pretty much Black people, right? 100K from CRE, it's not run by white people, right? 150K from Tunde Folawiyo, right? 10K from a bunch of people. You know what I mean? People pulled their coins together and made that company a $3.5 billion company. And they ate good for it, right? So for me, I continually say the real challenge is how do we get Africans to choose themselves? Because this whole idea of believing that you have a choice between 6 and half a dozen is silly.
Okay. Amazing. So I think we're going to wrap up here in just a few minutes. So if there's any questions, get ready. We're going to close a little bit on the macroeconomic trends around population. So many of you probably heard, we've talked a little bit about capital. We've talked a little bit about the diaspora. And again, we're centered around the question, which is around is African prosperity at the center of global prosperity. So the last piece is on the trends around population. So you've heard the statistic at this point probably, right? That by 2035, the number of people on the African continent under the age of 16 will be higher than the total population across the rest of the world. By 2050, 1 in 4 people will be African. So in a conversation with Jude, sharing a lot of this information about the average age or the average population across the world is getting older, but on the continent, it's getting younger. People are having less children. We're barely replacing our parents. What does that mean in 20, 25 years? What does the world look like? So I'm going to pass it over to Jude to give a little bit more context around that.
So this is my new hobby horse that I go around, and this is the argument that I'm making on why I believe that Africa is at the center of global prosperity. And I'd like to start off first by using median age. The oldest society in the world today is Japan. The median age is 48. Median is just right in the middle, half up, half down. Next is Italy, 47, Portugal, 46, Germany, 45. The only reason the United States isn't there was because of immigration. The US is around 39. China is 38. Now, China is unfortunate. China is one of those countries that got old before they got rich. So, and that's because of the one-child policy. The global average median age is Latin America region at 31. The second youngest median age in the world is India at 28. The youngest in the world, as you know, median age in the world is in Africa is between 18 and 19. So barring some catastrophic event, half of the people in Nigeria today will be alive in the 2080s, half of the people in Japan today will not be. It is my view that the very future identity of humanity is African. So when I make this argument that Africa is at the middle of global prosperity, this is what I mean. That's one, just looking at median age. Now, again, something really, really crazy would happen. There's something else I want to say, that by 2050, there will be 93 million less working age people in Europe than there were in 2015. For the mere reason that Europeans are living longer and having fewer and fewer children. So most of global prosperity is driven by production and consumption. Who's going to consume to drive prosperity? After 2050, 95% of the increase in population is going to occur in Africa. Now, when I start talking about this, I usually say to people, you can dispute my conclusions, but the trends are there, right? Make your own conclusions from them. So that's why I started off by saying that we usually thought about the poverty in Africa as an exclusive and a localized African problem, but that is now a global problem. Because if Africa remains as poor as it is, then you can imagine what the future looks like. And I can tell you, back to, I don't remember your name, the lady in the green.
Julia.
The point she was making about, different ways of providing skills, of training, is that there is now a frenzy, but it's going to get worse after 2035 for skilled labor. Germany, for the first time, has introduced a green card. Germany didn't have a green card program. Portugal, Sweden, they've introduced work seekers visa. You don't need to have an offer to show up to look for work. KPMG Canada has opened up their internships to internationals. Countries in Asia are also opening up, providing visas for high net worth individuals, but that number is going to continue to dwindle, especially after 2035. So the population that would drive global consumption, but the population that will provide skilled labor to drive the global economy will have to be in Africa. The problem is, if we're not investing in the training and the upskilling of this population, then it would just be a bunch of people who have no skills. Yeah. And so that's why I believe if we can begin to invest in African human capital, I should end with this story of the Ethiopian government has been very, very intentional about negotiating work contracts that allow Ethiopian citizens to go to different countries in the Gulf, elsewhere, and work. We still have to work out the kinks of that because a lot of Africans get misused and abused in those places. But the Ethiopian government now has not created an entire government ministry that is responsible for negotiating that. So they were invited to Gdansk in Poland, and the city of Gdansk wanted them to come. The companies in Gdansk wanted them to come. Now, if you know anything about Poland, you know where this is going. So the company said, we can start with several hundred, but we will go to 10,000. The economy today can accommodate about 10,000 Ethiopian workers easily. So cities happy, private sector's happy, and then they went and met with the Polish government. And if you've been following politics in Poland, you know that the government in Poland doesn't want to hear this. And the same thing is happening across Europe. Right-wing governments that are basing their party, their attraction to come into power is against immigration. Well, why are we going to Europe here, right? But after 2035, it's not going to be a request. These places are going to be begging people to come, young people, and especially in Europe, that has a very generous social safety net. So less and less people paying into it, more and more people drawing from it that are living longer and longer. Africa is the solution to our consumption, to our prosperity, to our skills problem. If we can begin to make the investment now, this is the basis for which I believe that when we think about global prosperity, especially begin in 2035 going forward, that Africa is at the center of that, and a poor Africa is a poor world.
So you respond. And so again, taking away that point of where we're headed and where we're shifting. If you're thinking about investing, Julia really went deep on a lot of where learning, skills-based learning needs to go, right? Tembite talked a lot about assets, being able to uncover the assets in your own respective countries. You have a platform in Daba to be able to do that kind of investing. So bring it home, and bring it and frame it in the context of the time framework, right? And the population trends and kind of how you see this going.
Well, you see, I honestly think Jude is amazing because he makes the case.
It's like a master class.
He makes the case for the Western governments. That's a case for Biden, and I wish him luck. I don't care for Biden or the US or China or anybody else. I really don't. I'm Africa for Africa. Sorry. Yeah. Oh, and for me, the African response to that argument is, I don't want my talent to leave. You know, if you want them, you get them over the internet. That's the best you get. You make robots for the rest of it. I want my continent to stay on the continent. And that's for me. So I'm not optimizing for the US's benefit or for Europe's benefit. They had a lot of time to make the investments for me. And that's more the reason why I think we need to put in the capital ourselves. Because by the time we're seeing the consequences or the realities, right, of this thing, we will then have and it's funny because we're begging and they're not responding. So I'm like, kind of like at that point where I'm like, okay, we're tired of begging. Thank you very much for your amazing hospitality, quote unquote. We're not begging anymore and we're not talking to you anymore. You want talent, fly into Africa and look for talent. And you will set up on my terms, on my grounds, in my land, with my taxes.
Because if you don't, the world is going to look a little different for you.
Well, it doesn't even matter, right? Well, however the world looks for you. Because that's not really my concern. So, but the other side of the conversation, and this is the part that I think has to be highlighted, is that the burden of the population demographic boom is that if we don't invest in our people, we suffer the consequences entirely.
Right.
And the world would very happily build high walls to bar us. So those of us who think we're working in high finance here in London and we're happy and we're running away from the dysfunction, right? The reality of it is that if they don't see that benefit, quote unquote, right? They're basically, you're watching your loved ones in Africa burn, and they're just here, unbothered, which is why I'm not bothered right now, right? And I'm more focused on how do we get the continent what the continent needs, as opposed to what their problems are, because when we had problems, we didn't quite get the right support from them all the time. And that's how we have to be thinking as Africans, right? They have problems that are coming. They have challenges that are coming. For me, I would rather much emigrate my people to Barbados and have the high ground of a negotiation, a real negotiation where I say, oh, sorry, they're not coming to the US, they'll be in Barbados, and you pay them the same amount. And that money flows back to my country, right? Than give away all the goodies, right? Because then at that point, you know, and it's like, well, I'm very sorry about the situation that you're in. But unfortunately, you know, we're asking for real investments in our education systems and we're not getting it. The Nigerian education system shut down for 8 months because of $2 billion. That's like less than $2 billion, $2 billion. And that's less than Harvard's endowment, you know, in fact, they spent less than that in a year of expenses. So why couldn't we just have a rally of a bunch of universities coming in and saying, hey, we'll invest in Africa's education system. You're taking our talent for free, by the way, and we're paying $1 billion for the privilege every year. We subsidize that as a government. So for me, I just look at this question as a question of fairness, right? And I think we've been too nice as Africans. We're worried about everybody else's problems. Where are they going to get their lithium from? Where are they going to get they don't care about where we're going to get food from for the hundreds of millions of Africans that are going to go to bed hungry tonight. They don't care. They've got a bunch of people in Rome who make a ton of money of saying there's a problem, but never actually solving it. So for me, I'm unbothered. And that's my view of the demographic opportunity, is making sure that we invest in ourselves for ourselves.
So African, quickly.
So there's a reason why here. Yeah, so Greg Marksing, that's his name, and farmer. Yeah, he was in Roxon. He was in New York at it was called the Unstoppable Africa. This event on Unga. I still think maybe I haven't been to a lot of Africa themed events. It was one of the best that I've ever been to. It was a really good quality of thing. And Greg was on the stage talking about Informa has just recently moved into Nigeria. And within, was it 6 to 8 months of moving into Nigeria, he lost 85% of his pharmacists. They immigrated. Whether we like it or not, other jurisdictions are going to provide an attractive option to skilled people in Africa, and they're going to leave. My thing is, we shouldn't let that completely undermine Africa's development. So let's train as many skilled people as we possibly can, because people are going to leave, whether we like it or not. So then I asked Greg, well, is it because you're not offering them? He's like, no, it's not. In some of the pharmacists took a salary cut, but they moved into a place where they could actually raise their kids and give their kids a very good future. So that's going to happen whether we like it or not.
Right.
2, there's a guy at the center, the Council on Foreign Relations, Ebenezer, I don't remember his last name. He's Nigerian. He tells this really funny story. It might be apocryphal, I don't know. He said there was a strike. Healthcare workers were striking in Nigeria, doctors, because they hadn't been paid. So the Saudis went across the road at the next hotel and started recruiting. The strike ended and people went so that they could go to Saudi. The point I'm trying to make is, whether we like it or not, obviously we want African talent to remain in Africa and build Africa. But these are individual decisions that people are making for themselves and their families. And if they get offered an opportunity to go somewhere that's better than where they are, most of them are going to take it. So let's have way more pharmacists than the few that will leave and cause our health systems to collapse. Let's have way more engineers. And then finally, there's a lot of money still in the West. We need that money.
They disagree. They disagree. It's okay. So I'm going to ask the question again. Is African prosperity at the center of global prosperity? What do we think? Yeah. Oh, I know you're hungry. I know, it's not any better. It's not any better. So we're going to give 5 minutes for questions, and then we're going to wrap it up. Going to have Caleb come up and give us a quick wrap up, and then we'll go get food and drinks and all of that. So 5 minutes for questions. Any questions?
So first of all, we don't have a restriction of how long the investment has to stay with the country before you can break it off. And I have it in their house. We don't have it. So people can get any time in and out after the fall. And secondly, the government from the town of contact. So I mean, down a lot of people go there. The frustration to the government getting set up becomes very difficult. And one person for the government can make decisions for a whole nation. How can the general minister go to China make a deal for all Nigeria? It's not possible for, like, everybody to China, make a decision. It's not what the prime minister come to the US and make a decision. So we don't have this regulatory approval, how do you say? There's no disaster in place, there's no enforcement in place. So everyone feel like they can do whatever they want at any time, any moment, what they can do. And when things are like that, it is very difficult because of the capital market. I mean, I went to the bank to this fund, both renewables, energy, export, stuff like that. So there's this critical an access of market, what's there for the fundamental of the and the access of the now. For us, the government has a big say. The government always has a big tendency in between, and when it's like that, it's actually supposed to make sure because it has to bring money. So if I think that money can't get it out in the what will we do? So those are some of the things I think are lacking in terms of our mental program, which makes it better more comfortable to come in or say, I don't want to do it because I don't want to do the thing. I want to understand. But what I'm going to do is this legal program, but things don't go right.
I just a quick thought. I think for me, we have to reframe the problem. The problem is not that we don't have the right rules. It's that the money doesn't share our point of view. Most of the money that's coming into Africa is coming in at ridiculously high interest rates for nothing other than the return. That's the truth. They have no long-term interest. The money that is going to China and India is money that's sitting there. It's coming from their diaspora, from people who have and share their point of view. And that is the fundamental problem Africa has. We're expecting money from people who hate us. And quite frankly, don't want to see us progress, because otherwise we wouldn't pay the same rates. And until we flip that to say, how can we mobilize our own capital, our own skin in the game, ensure that we are working, even if we're working for a foreign company, we're working in the interest of our continent. Until we're doing that, we're not going to make progress. And that is the fundamental point in my mind, because the more we believe at this point of, well, people have to come in and be able to go out, and it's government, it's this, it's that, there's 1 million excuses. You read about, the capital markets in 19th century, 17th century, 18th century America. It was the same way, right? Governments regularly defaulted on bonds, regularly. It was a normal thing. Everybody worried about that. But there were how many bank runs in America? Yet you have a very strong financial system. So there has to be capital with a point of view that's focused on development. And that capital will not come from foreign capitals.
So, there are designations, and I think they are proxies for perceptions of risk. We have developed markets, emerging markets, frontier markets, and the premium you pay is on the perception of risk for the investment. I mean, what it is, normally, if I invest in a business, the return that I get is you're paying me for the risk I took. Mm-hmm. So if it's perceived that a place is risky, then the premium will be high. I would say this though, that within a month of the coronavirus starting, over $100 billion left emerging markets for the safety of developed markets. Right now, though, at some point, if treasuries are yielding 4%, why would I take my money from almost risk-free 4% and invest it in a market with significant risk? So when the US government and Western government central banks were doing quantitative easing and interest rates here were close to zero, then Ghana looked attractive if you want returns. But in a world where Ghana is facing high inflation and treasuries are yielding 4%, then there's no point in putting my money in a risky place. I'll put my money here. So to your point, we have to give people an incentive to invest their money with us. You can force people to do that. I would say though, after the Asian crisis, after the Latin American crisis, countries like Brazil, Thailand, India started to issue bonds in local currency. So if you want to withdraw your money, fine. You would be withdrawing it at a loss. So they protected themselves from those runs. And I don't know if we're in the place yet across the continent for us to do that, but I think that's the next thing for us to do. Instead of doing Euro bonds, we're issuing in foreign currency, and then appreciation of that currency actually increases our interest payments. Maybe we issue in local currency.
Excellent. So one more, and then we're going to go ahead and wrap it up. Yes, in the back. Jude. So the question is specifically how to manage as a founder as currencies change, or what?
So,
okay.
Yeah.
Right.
So I think for us, the way we look at this problem is a really simple way. What we do is we tell, again, our key metric is contribution to global GDP. Yeah. So we invert the problem. We say, what are you doing? There's no reason why you shouldn't launch in America. We're telling our companies that. We're like, you're better. You've been through more trouble. And quite frankly, you're already headquartered in America. So you might as well, and you're going to be forced to pay the taxes there one day. So what's the point? You might as well take that money. And that's how we've got it in companies like Move to say, look, why don't we go to London where we're making, because of currency, in a week what we make in a month, and our costs stay the same. Why don't we look at, and that's why we're very focused on this idea of global talent. You know what I mean? And saying, how can we, all of us, be engines for creating value in dollars, contributing to global GDP. And again, this is exactly the point, the further point that, just to buttress some of the points that Julie was making earlier, which is that we need to shift the way we think as Africans from what can people do for Africa to what can Africa do for the world, and demand the premium for it. So if we're exporting our human capital, we got to tell all these healthcare systems, look, guys, what the taxes must come directly in dollars back to us because they are our citizens. And we spent money to educate these doctors. So if you can't do that, then we're not doing your significant economic presence tax. And maybe we wouldn't even pay, we wouldn't allow you to take out your royalties. We got to hold the world hostage because that is the level at which power must engage. And if we say, look, a 30% tax of all the doctors in America is easily more money than we need to rebuild our healthcare systems. That's where we got to go.
Done. Amazing. So with that, do you want to respond? Okay. You find them after, okay? And just finish your questions that you have. And just to really wrap this up. So the ethos, what you should be walking away from the session today, African prosperity is at the center of global prosperity. So you should have that in your heart. We talked about the goal or the metric from 3% GDP to 30%. What is your role in that? You all came here with something in you that you want to drive, move forward, push. So you have that metric to now be watching, and you have to contribute to that change if you actually want to see it. Let's give them a round of applause. All right. You want to close this out? Oh, yeah.
Okay. Thank you so much. I'm Caleb Zipperstein. I'm a partner with the Fund for Africa's Future. Not going to talk for too long. Definitely don't have anything to add to the incredible things that the panelists said. So I just want to leave a little bit of a recap for us to think about and to reflect upon as we go into the evening and into the work ahead, because this really isn't just the end of an educational session here. I want to think that this is really the start of a lot of collective work. So special day for a number of reasons, right? First is the session was launched by the first time a world leader has graced a Future Africa event with the Prime Minister of Barbados. So big thanks, Barbados, yeah. So big thanks to her for her time. And then we went on to a great keynote where you didn't just tell us about what we're doing going forward, but specifically you mentioned the values and this whole idea of the collective, where it's not just an investment of your capital for return on capital. It's a investment of your energy, your time, your know-how, your heart, your soul, your mind, and hopefully a return on that as well, which is something we definitely believe in. So many great insights from the panel that came after that. Big thank you to the moderators and to all the participants, our colleague Julia as well for the great insights on the Future of Learning Fund, which you can talk to her more about. It's a great, really historic product, first of its type, not just as a thematic, but specifically as an EdTech fund. Timbite, with your amazing 20 years of experience and representing us on the inside of the DFIs, as you shared. Thank you so much for that and for your continued work. And Boom, the founder on
on the panel. Founders is why we do this. So thanks for representing us and for doing it at NASDAQ. And now today, just, it's just so inspiring to see so many people here that are dedicated to this. And, we talked a lot about next steps, everything, but I just want to, leave us again with the values of Future Africa, of lead with courage, do hard things, help communities prosper. This event was special because, after a year and a half, it's the first time a Future Africa collective event was really run through from A to Z by the collective, where all we really had to do was show up and pay the bill, of course. But it's the first time that that's happened, and it's an actual demonstration of what it means to lead with courage, to do a hard thing, and to help a lot of people prosper. And for that, we should just give the biggest round of applause to Vivian, to Adebayo, to our aunties and uncles, all of you here. Thank you so much, and enjoy.